AMC in the sky. You know how I feel. GME way up high. You know how I feel. Y'all in the chat. You know how I feel. It's a new day. It's a new dawn. It's high prices. And we're feeling good. Ba-dum, 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 ba-da-da-da-dum. Hello, everybody. How are you all doing? I hope you're doing very, very, very well out there. Of course, this is your friend Rocky here for the price action. We'll be taking a look at cryptocurrencies as well as our good friends GME and AMC, and checking in with our drawings. All of our crayons here on the charts, and we'll be having some lessons today. Okay, so this is crayon lessons. Crayon lessons for everyone. Okay, crayon lessons for everyone. I'm going to be taking it really easy. Right. We'll be taking it really easy at some point. And educating everybody. Okay, so we're going to be doing some education here, and accessible education for all right? That's why I put on my polo neck. If 3,000 Trin turns up, you'll be happy to see me in my polo neck, because, of course, we will be doing some education here today. So this is Professor Rocky in the house today, right? Turn up my microphone. Well, that's the thing, right? It's at the maximum there, but I can maybe fiddle around with some settings here. Maybe fiddle around with some settings if I go over here. Maybe if I set it to that, is that going to be louder? Is that louder? Change the setting on it here, but might be a bit louder. I don't know. Hoping it is, right? Hoping that it is. Get rid of that app because it's covering the chat. Daniel, nice to see you. Nice to see you.
I've given your brother too much and you not enough.
Oh man, well, it's all appreciated, you know. Super happy to have you here. Thanks so much for that. That's very nice. Very generous of you, Daniel. You're a very generous chap indeed. Nice to have everybody here. Let's just have a wee catch up with in the chat here and see how you're all getting on. Is everybody dead happy today? I hope you all are. We've got, well, of course, Daniel here. We've got Anders, Will, Shaza, Jimmy, AV, the list goes on. Master Bilbo, love your tweets, by the way, Master Bilbo. God, I love your tweets. They're so funny. I see it coming up and I'm like, that's an appropriate Lord of the Rings tweet. And then I see, of course, it was by yourself, and it makes me laugh. Jeff, good to have you here. Nice to see you. Adrian, nice to have you. Derek, read your name wrong. Looks like Dank from a distance. Fed, nice to see you. Worthy, good to have you here, my friend. Sunny, we've got it. V Bardos, Rich, excellent. Good to have every single last one of you. Of course, VIP Queen Bee, Apple Blossom as well in the chitter chatter. We've got Lee Willis, Paint by Nate, and Space Captain, Aaron Baldwin. Good to see you. Good to see you, Al. Nice to see you, Lee, of course, as well. We've got Mining Boom, Bad Mama Jamma, Emmy Campbell, Julius. It's just wonderful. What a community. What a fantastic atmosphere. Loving the use, of course, of those emojis as well. Let's just check in with the prices, shall we, and see how things have been getting on. Maybe I should hide the drawings off here just a wee pity, so that we don't get too distracted by the wonderful art. And hi everybody, hi there, see you in the chat, see you all, hi Tony, hi Will, hi Anna, hi Tristan, hi John, hi Queen Bee. Right, so the GME price, right, it's $241, isn't it? That's nice. What we have here on AMC, it's $19.86. That's pretty nice, isn't it? We can see the high today has been $19.90, just sniffing that $20, right? I mean, $20 round number. I think that's an exciting number that everybody would be looking forward to on AMC. It's in the theaters soon or something. And then, yeah, GME up there at 241.50. Oh, what a lovely day. What a lovely day it is. Wonderful stuff. So, of course, yesterday we were chatting about how we proved a lot of people wrong just by pushing up. Just by pushing. This is a 2-day chart, by the way, ladies and gentlemen. That's why that looks, so extremely good on that one candle. Here's a 24-hour chart. Yesterday we were talking about how we proved a lot of people wrong just by moving up a bit. Now we've moved up a heck of a lot, and I think it's taken it almost to really, we've almost been unkind today, and that we've almost haven't we, we've really rubbed our faces in it. So I actually was wondering then, on that note, like what's everybody feeling? Are you all feeling dead happy? I think there's no shame in having got the prices up to these highs that we've got up today. I think we should all be very happy with it. How do you all feel? And we've got Bitcoin. What's Bitcoin been up to? COS has not had as stellar a day as the other chaps there, but it's done well anyway. It's done what it needed to do, and it had a really, really, really strong day yesterday when folks were asking about it. What would it? I want to get up here. Oh, Bitcoin versus USDT, just so we can see what's happening over there in crypto land. You got 38k on the Bitcoin. That's good to see. Ethereum in here at $2,719. Not managing to really rip and roar towards the top side, but certainly not cascading downwards like we've seen the last few days. So that's an improvement. I wonder, I've got these wee E's and all that showing here. I'm going to just hide that off there. There's, of course, earnings stuff coming up, and that with GME, and that's all lovely and everything's jolly good, and we're all super happy to have these things happen. I'll leave it on the charts there, but it does hide up, cut the edge off that bit of volume there at the bottom, and as well, it's a bit of distraction. It's a bit of a distraction because we'll let all of the sort of the due diligence detail analysis chaps out there that do a fantastic job at that kind of all get really hyped about that, and we'll just look at the charts for now. Well, how do I get rid of that again? Appearance, isn't it? Isn't it appearance? Isn't it? Is it? Or symbol? Is it on symbol? Post price, last price? Where is it that we get rid of all that crap? Status line, indicator titles, show. Where is it? Scales? No. You know what? Who cares? We'll leave it on for now. That's what we'll do. Appearance? I want to get rid of it. Right, struggling to read under pressure here. Right, so we'll just, it's probably right there in front of my face, whatever. Oh, hello, Eddie Koreshi. Thank you so much for becoming an early supporter. Right, great. So what are we going to talk about in today's episode? Right, okay, let's just kind of do this. Let's do this properly. Let's have everybody know what we're going to talk about. I'm sure there's enough people tuned in that we're going to tune in or whatever for me to be able to put the sort of what we're going to talk about section in here and not have to repeat it too much. Great. What we're going to do is we're going to be looking at GME and AMC and celebrating how bloody dandy lovely everything is, and of course we'll be aware of the potential for pullbacks and all sorts of stuff, and we're going to tell everybody to hang in tight and all that sort of good stuff that goes along with it all, and we'll be dead happy with what we do there. But I want to make it so that everybody can understand what we're doing, so we're also going to bring up a chart full screen and talk about really what it is to do about the old technical analysis, and maybe kind of give people who are newer to the whole game here a bit more of that confidence at what they're looking at, and how they're going about doing things is on the right path, and make it so that if there's any questions or confusion that happens along the way, that people have the opportunity to talk about that. Settings are under events under the settings tab. Thanks, man. Of course, events, right? Yeah. Well, the only one I didn't click on. I was completely blinded to that, wasn't I? Thanks, Peter. Right, so something for us all to learn right here, okay? And I think that's an example to everybody. There's not going to be any of this stupid question thing. I think if I can do something like that right here, that wasn't actually contrived, by the way. If that can happen to me right here, right now, in front of everybody, then of course you'll not have to feel like there's anything like a stupid question, right? Bit of give and take there on that one. And by the end of that, spend an hour doing it, something like that, and by the end of that, you might go from being sort of somebody who's thinking this is a really big daunting task to kind of get into doing all of this, to somebody who thinks I've got a bit of confidence, I found my people, I found my people, found my family, and all that good stuff as well. Okay, right, sweet, nice one. And Apple Blossom chipping in there with a wee reminder for everybody to not forget to hit the old like button, because that really does help. Thank you, by the way. I learned a lot from those videos and I use it religiously daily. Tradespawn, thanks so much for doing those, Jamie. So Jamie also has some really excellent stuff. And along the way is what we're doing. Suppose we can mention at times resources that you could look for, etc. Tradespotting himself is a fantastic resource, and I wholeheartedly endorse that recommendation right there. So that's cool. So we'll do all of that. That'll be great, right? So that's kind of the plan. So then what we can talk about is learning objectives, I suppose, just to kind of summarize that for us. The learning objective here is going to be to be able to, at a glance of a chart, understand what the conditions are, and then also to be able to kind of have a bit of a step towards having a process about some things that you could do when introduced with a bunch of this price action data, and start to disseminate it, how you kind of get into that process. And then of course as well, a learning objective will be to leave you with a whole bunch of ideas of things that you could pursue to kind of go on and think, well, great, I've got an idea about something. I know that if I continue learning about this, it's not wasted time now in my journey of learning things. Okay, because that's a big hurdle to overcome when you're trying to learn a new skill, is I want to learn to cook, and the first thing you learn about is like what you do with I don't know, seafood or something like that. It's a little bit harder, just like boil some potatoes, right? So let's get to the boiling of potatoes in this episode. Patrick Leach is saying to me, I know it is common that when charts gap up, they tend to fill the gap. Does that mean we need a pullback? That's an interesting question. Fantastic, cool, nice one. What do you recommend for going about learning TA? Any literature recommendations, etc.? Comes in from Clemens. That question's a good one as well. Great. Okay, so that is two good starting places for us as well. So we can do this in a way that involves a bit of chit chat as we come in for the close of the day, by the way. So we've got 15 minutes ish, 20 minutes left in terms of the price action. I think that we're okay to kind of accept that we've had a really good strong day at the minute, and everything's looking pretty rosy for both of these, and that there will be various areas of support, etc., that we can look to after market close without kind of having to sort of shit a brick about it right now. Okay, everything's okay, we're doing all right, which is nice. It's nice to have this time together then in that sense. So first, over to Patrick's question that came in, and he said, I know it's common that when charts gap up, they tend to fill the gap. Does that mean that we need a pullback? Well, it doesn't mean that we need a pullback, and there's a good resource then for getting introduced to this idea as well, and this will kind of come up a few times. There's plenty of these out there. This one will be just a quick mention, I suppose, probably to Investopedia. Now, this is the sort of thing I've looked up on numerous times in the past. So you can go Investopedia and then say chart gaps. Okay, and this will discuss in here, that there's various different types of gaps and strategies that people have around gaps, etc., and give you a bit of a breakdown of what they are. So if you're wondering what Patrick's referencing, then you can find that just with a simple search on Google or Investopedia gap, right? Oh, what's this here? Worth donated
300 next week, and are we still looking at 217?
Right, that's totally something that we'll get around, and we'll kind of we'll discuss that in just a minute here. So there's different types of gaps. It shows you examples of the chart here just there for that. And then the question was, do we need to fill the gap in? And there's different types of gaps. Some of them are called like breakaway gaps, etc., with where you've got all that extra bullishness coming in. And for example, anybody's thinking, well, is this a breakaway gap, and do we need to fill this one? For example, and there's also different time frames to be looking at. For instance, in the start of the show, last week whenever I was doing the market opens, I'd quite often be looking at it on, say, the 15-minute time frame and talking about the gap that was visible at the start of the show and saying, well, it's quite likely we go back up and fill that and find pressure, etc., at that price point. So, but it doesn't need to happen. Okay, it doesn't need to happen. And what you'll often see then as well is an expression of that by coming back down and testing the area of the gap itself and then not filling it. And there's various examples out there. A sort of fairly famous one amongst my sort of larger audience that's been watching along for the last 18 months is, of course, the gap that exists on the Bitcoin chart on the CME futures on the 24-hour time frame and at around about 9 to 10,000, which was very famously retested and ultimately left unfilled. There was a degree of debate about that at the time. Now, we don't need to do it at any given time, although you're right to say that there is that sort of expectation, and expectations do tend to get some sort of test at some point. So, but the sort of answer to the question, simply too long didn't read on that one, is just to say no, we don't need to have a pullback to fill that gap. Although there is a fairly good likelihood of that actually occurring. Clemens Welder said then, what do you recommend for going about learning TA, any literature recommendations, etc.? And there's a very good answer to that one. It's one that I'll always give to everybody first off when asked this. It's probably the book that I reference most when I think about trading, because ultimately in trading, everything's as old as the hills. And even though a lot of the techniques that we're using here, almost all of the techniques we're using weren't around commonly, and most of them not at all back when this book was written, the concepts that exist are so timeless and ever present that there's always a reference that you can find back there, kind of no matter what you're doing or thinking or feeling about trading, whether it's the main character himself in the book or indeed one of the other characters around. And it's funny that I use the word character because it's written about a real person. However, it is actually given the protagonist in the book a fake name, very similar to his real name, and references around him as well, all these different kind of characters, but they're real people, real figures from the day. And you can get a copy of this book that I'll actually explain with references to who the people are that are being spoken about at the time, and all the famous now historical events which were kind of unfolding in real time there. And it's written almost like a fictional book, but it is true to life. And that, of course, is Reminiscences of a Stock Operator, the story by Lefebvre. Is a Frenchy name, Lefebvre. You'll find it there, and that stuff. It's in my Discord as well. Got a reading list where you can find a reference to that book. And it's just so chock-a-block, page to page full of amazing stories, which are actually not true to life, but real life stories that were from the time around him. Fantastic stuff. Patrick Leach, thanks so much for coming an early supporter. Really do appreciate that. And of course, then circling background again, I hope that's a good answer to your question. That's where I would recommend everybody starts. Okay, everybody, it's absolutely fantastic. And it's a starter book that I would recommend to people to read who even aren't interested in trading at all, because it's just actually that good a book, So it's definitely a fantastic resource for bridging into that world. If you're going into something that's very information heavy, it's going to be off-putting, in the same way that anything that's seems like a mammoth task can be. And this is just a absolutely fantastic introduction to the world of trading, and beyond that, the lessons that it teaches you will last a lifetime. How about that for a recommendation, I should be selling. Anybody got a car to sell? I'll sell their car for them. Right. Worth His Life asked earlier on in that super chat, 300 next week, and are we still looking at 217? So let's answer that question, and in part, I hope you don't mind me hijacking your question there, matey, by opening up a new chart and kind of explaining to people then as well, just so everyone can carry along with us. It's a good opportunity then to explain, what is this that I'm doing here? So for all those people that are new to this, so they can see what this is, right? So what I'm doing at the minute is loading up TradingView. Okay, this is the website's called TradingView. A lot of people ask, what platform are you using? I use TradingView, okay? And there's a lot of information here on the screen, wouldn't you say? So what I'll actually do is make a new chart layout. Okay, and this is a fresh one, so this is more equivalent to what you would see. Of course, this is in dark mode because I get migraines. I'm looking at the wrong screen here. I get migraines, so I have my chart in dark mode. I could also have it in chart mode because I'm cool. Actually, I have my chart mode in dark mode because I'm cool. Right. Anyway, that's why. And then what am I going to do here? Right. I'm going to save this. Actually, save this chart layout because we can come back to this in the future, I suppose. How do you save it again? Unnamed. Is unnamed a good name for this thing? I'm not too sure if there's a good name for it. Rename. That's how you do it. So we'll call it crayons with friends, right? Because that's what we're doing here. This is the crayons with friends chart. So we have a chart here, right? This is the Gamestop chart. Fantastic. And I'm covering up with my face a wee bit too. That's even better, right? So I'll just move myself. And here we have this chart. So this is what they look like first off, and you have got all this information here on here. Now this is actually quite a lot of information. You might be thinking, is there any information there? Somebody else might think that's overwhelming already. What this is a bunch of what we call candles, and these are bars which show you the prices, right? Okay. They've got wicks on them, like keeping that analogy or that metaphor or whatever going with candles. The wicks are showing you where the prices went at their highest and lowest points during the day. Thanks so much, Susie. And so they show you where the highest and lowest points were. And then the bodies, which is the thicker part of the candles here, show you the open and closing price. Right. Why are some of them red, some of them green? Well, the red ones are when the closing price was below the opening price. So it opens up and then the prices went down, so it closed lower. And then that forms, of course, a red candle. And then the green candles, why? Well, because the opening price was lower than the closing price. The prices went up during the day, and then they draw on here, we paint it on nice and green so we can see that was a positive movement, and that's what we're looking at. We can see the prices moving up and down here, and then there's another load of information at the bottom, and that's the volume throughout the day. So when you can see here, they've also gone with a whole color coding them. I tend to turn these just to be in one color because it's distracting, but they color coded them as well, and you can see lots of volume, you know, on this particular day compared to this over here in this day where this bar here was a lot lower, so you know, less volume. So you can see the volume throughout the trading period. Actually, that's a 15-minute chart. Sorry, should have said that earlier. On that period, okay, which is a 15-minute period on this chart, right? So this shows you for every one of these candles, it is the period that you selected to look at. So that's called your time frame, right? And this question that we were asked was 300 next week. So that's looking at a bit broader than the 15-minute time frame is likely to tell you. Although, you know, having said that, we're seeing a very strong upward movement in this price here on this particular chart, with over on the left it being 160 and now up here at 240. It's conceivable you could think on this chart it's a good place to look at that. But we'll go up a couple of time frames here to the 4-hour time frame, and we'll see a lot more information. So every one of these bars is now a 4-hour period, right? Okie dokie. And you can see same rules apply. Volume down the bottom, same rules apply. And these candles, of course, as well, with the wicks, etc. All of that same information. And this is where we can see a gap on the chart as well, which is in reference to that question we were asked earlier on. And filling the gap, by the way, for everybody would mean the price action had come down here, or indeed it gap down again and then rose up and filled it. Whatever direction is not important, but the fact is that they would be looking for one of these candles to have been drawn on here in where this area where the gap was, and that would be considered filling the gap, right? Cool, excellent. So that's a fairly that's what we're doing. We're using TradingView to do it. And one of the questions I also get asked as well, like, you know, why would you not use Webull or whatever platform you happen to be trading on, for example? And it's much better to use a separate system because it's kind of like, you know, not shitting where you eat, if you like. And and then as well, you've also got they've got like a lot of tools here. It's really good to use it. And of course, there's the separation of tasks. It's the same sort of thing as any sort of rule, like, you know, in terms of thinking about this, like, it's nice to have a separation so that you do your charting and you're not experiencing FOMO, etc., with a button over beside you saying buy, sell, etc. You know, like, whereas if you're doing it on the platform itself, it's very much, you know, going to connect more emotions together than necessarily you probably want, and various other, you could talk all day about that. Okay, so and the question was, next week could we get to $300? So $300 is up here, and this happens to be where we had a previous prices were up here before. Okay, at this time we can see in the chart that the prices were up here before, and that's in at around about $300. And you could express that then there and thinking, well, if the prices were up here before and maybe didn't get past, maybe there's some sort of glass ceiling here. You know, it's not drawn onto the chart so we can see, but maybe there's a glass ceiling up above us, maybe of some form of resistance up there. Maybe that would in some senses constitute a target for the prices to go to if we think about, you know, where they've been in the past. And you could think about things like the price of milk at the supermarket over the period of 5 years, where you think, you know, oh, it was $1. Now it's, and I can remember 4 years ago it was 180. It's 170 now. You know, if I asked you, is the price of milk more likely to be, you know, not more likely to go one direction, but is it conceivable that the price of milk would be $1 again or 180 again? You'd be like, yeah, you know, but beyond those zones, maybe not, because it's been that, you know, that type of idea. Same thought, sort of thing applying here, just looking at the prices, right? So that's all. That's what we're asking here. So could we get up there in the next week? And that would rely on having sort of continuation of this more bullish movement. I'm going to have to kind of answer the question, I suppose, slightly in a way. This is obviously, you're welcome to listen on along if you're a complete noob as well, no problem. But what we're looking at here is, can we get the continuation up the way? And there's numerous different ways of looking at this. There's that first question earlier on, like, is there a chance we fill this gap? There are plenty of reasons to come back down towards this area from where we are right now. And one of the ways that typically I would look at this would be to be looking at it from a, oops. Looking at it from a Fibonacci point of view, just asking from that low that we came up to here to this high, where would that take us to? So the question really remains, you know, if we came down towards this 236, we'd be going down towards the edge of that gap. If we go down towards the 382, we come down and fill in that gap in, you know, and that would be a lovely place to see a bounce from, etc. Those sorts of ideas very much on the cards. And at that stage, you know, looking between these areas, if we pushed on up again, what would be a realistic high? And this is obviously very, very speculative at this point, but you could be looking up towards targets like $266, 283, 292, and so forth as a series of targets towards the highs. This is a sort of idea, and of course looking towards where you had your previous resistance, etc., and like just getting that continuation. So we could look to see if there's anything working against us on that front. We have got a bit of an increase in volume. I thought I turned those events. Oh, it's on the new chart here, so I'm just going to change that again and take these off. So we've had a nice movement up here in the 24-hour time frame compared to the previous volume. You know, again, like it's gone up a bit. It's not explosive volume, but that's very good. It's all just healthy. This is like a nice movement, but it has got enough of an upturn in volume for you to say that it's got an increase in volume as well. But then at the same time, you could be looking back down the way. That's just it is the way that is. Could we get up to $300? Yeah. And that's where I would be targeting next, because it does make a lot of sense where you've got this, it's really between this 278 area and $300 where you're going to have this, where we had this previous liquidity at. And that's you know, again, going to be a big scary target to a lot of people. So it's a nice one. I think it's quite clear on the chart, this whole period of price action here. So yeah, I think that. And next week, is it possible to do it? Yes, it is possible to do it. But what's easy for us to do is just to kind of, you know, ride along with the trend, and the trend's our friend until it ends. If it did fill in these gaps, this gap, would it have ended the trend? No. And going all the way down to these lower targets also wouldn't then end it. So my main priority is less to do with looking up to upside and saying, you know, will we get to these targets next week? Because overall what we're seeing is really nice, healthy upward movement falling out from, you know, with the potential to look at this on the linear scale as saying that we're breaking out from this sort of a pattern, etc. So overall good, right? And 300 would then of course constitute one of those next targets for me personally as well. Looking at this area on the left, it is possible to use this to look for targets between in the Fibonacci area and say that it's sort of 260 and then 312 is the 50%. Coming up towards 260 is that next target that we kind of talked about first, sort of 266 area, and then going up towards 1618 afterwards would be my ideal area to go for, and that. But that's relying on this previous massive area of volatility. So recently as well, I've been kind of just being a wee bit more prudent with that and looking between the high and low over here, and that target comes in close at 266 again for the 618. So I would say that 300 next week is like great and everything. Let's see how we handle 266 first. It'd be nice if we could do that in the next couple of days and get that real strong movement. But then at the same time, I'm happier in a way for us to not do it immediately, because that would then create sort of an additional parabolic movement, and I'm happy to kind of trend up the way rather than having anything which creates like too much exuberance too quickly. Market closed. All right, great, sweet. excellent. So I kind of ran the clock out on that one. Let's see what the market's close saying to us. Where's my multi-screen? Where's my multi? Oh, it's Reynaldo's song. Wait, is it the same one? The Diamond Hand song? Yeah, Reynaldo, you there? And the Diamond Hand, and Reynaldo, mate, you there? Is it all right if I play your song for everyone? I don't know. I have to go find the song first again. I don't know if he's published it. It's miles back, man, in the chat. Oh, he's published it. He's published it. Oh, this is great news. Sorry. Everybody watching along is like, what's he talking about? I'm talking about my man Reynaldo Moreno. If you don't know about this guy already, then what are you doing? You should know about this guy. Oh, there it was. Wait, I saw it already. There it is. He says, do it. Yeah.
You've got your mind made up. Ain't nothing to see. Wondering why I'm smiling, looking like I'm dumb money. See, I've earned my chips, screamed in pain, all the while fighting your denial like I don't have a seat at the game. I guess I'm deranged, but I'm gonna hold. I've been down much longer than you have been gone. Keep on paying no mind, I'm setting the mind. Best believe I know. Shining, my hands are diamond, never bet against me. Yeah. All that money you spent to hedge your bet, but your mistake is my take from my play against your greed. See, I know you tried and conspired your degenerate ways on full display. It's a shame how foolhardy. I guess I'm deranged, but I'm gonna hold. I've been down much longer than you have been gone. Keep throwing chips in, you know in the end, this hand's deeper than your money. Fool, my hands are diamond. Our future is shining. My hands are diamond. Never bet against me. Yeah. My hands are diamond. My hands are diamond. I guess I'm deranged, but I'm gonna hold.
Fuck yeah. Right. Nice one. Thanks, Reynaldo. So, brilliant stuff. Thanks. So, okay, back to teaching folks a wee bit about the charts. What was that I just did? That was called the Fibonacci Retracement. There's plenty of resources out there about that as well. TradeSpotting's got some on his channel. Oh, Nano, welcome to the family. Thanks so much. Lovely to have you a part of this. So what was I talking as well when I drew that green line down? That was a trend line. And okay, cool. Right. Those are just things that you can investigate as well when you want to. I wanted to make sure everybody kind of understood all of the real basics we spoke about first off before I go adding anything additional to this chart or discussing anything particular about, you know, what you can learn when you want to do technical analysis. But I wanted to as well kind of move away from this chart just to show you in terms of looking at a chart at a glance what you could see. So maybe we could go and take a look over at the AMC charts for a wee minute here instead, and then look at this on a broader point of view. Thanks so much for the donation, Susie. That's awesome. Thank you so much there. So maybe we can then take a look here and see at a glance a couple of things that you can say about a chart when you first look at it, because this is one of the questions that was discussed during TradeSpotting's video earlier on in the chat, and someone was saying, what can you tell when you first look at a chart and what do you do, etc. And I get that feeling. I'd not thought about that for years and years. When they asked me, I thought, yeah, that's something I used to kind of wonder. And here's a big old chart, and that might seem quite daunting. This is AMC Entertainment Holdings, the cinema guys, you might have heard of them. And this, and what can we learn just looking at this thing, right? Because we've already discussed that there's these green things, candles, got wicks bodies. We know that they show the prices, that you can see the price then therefore moving up here. We can see it went down and it moves around, and we know that it kind of snakes around, oscillates, and that's kind of, you know, maybe kind of overwhelming. What can we do to understand some of this thing? Well, first off, when you look at this, and I get it, right? Because here's another example, right? When I was learning to drive, I used to, the instructor would say to me, look in your mirrors, mate, you know, and see what's around you. And I would kind of do it. I'd look in the mirror and I'd be like, cool, job done. I've looked in the mirror now. And then I'd just continue driving along like, you know, whatever. And it took me quite a while to be able to actually look in the mirror and actually process what's going on in there and say, okay, there's a car there, etc. So I was a bit kind of like a bit dumb on that front, right? It was. Totally. It took me quite a while to learn that. And you'd think, wait, Rocky, what's that all about? Maybe we all have our things, right? Okay, so I get it. So you're looking at this and you're like, what? I'm looking at it. What am I seeing though? What am I seeing? And let's try and break that down a wee bit. First off, what you're seeing here obviously is a massive downward trend on this chart. That's what that was. The prices were moving down the way. And you could obviously then straddle the prices in numerous different Crayon activities, such as ones that go quite close to the price like that down the way, and ones that go quite close to the price like that down the way, okay? Then you can do, and this would be getting you closer to the world of like pattern analysis, which we'll cover in a minute. But first off, your eyes as a human can recognize a couple of things. You know, you saw it going up there, and then you definitely can see it going down here. And that's like the first thing that you would see. You would recognize this chunk of price action, and then you'd see the distinctly different aspect to this chunk of price action. Okay, it's distinctly different, and you'd be able to notice that quickly. So you'd be able to establish, right, okay, I'm looking at a broad time frame here, 24 hours, a lot of information on this chart spanning a number of years, big downward trend, massively different activity over here on the chart. That's one of the first things that you look to. Okay, so you're able to identify maybe there was a trend, maybe it's ended, maybe we're in a new trend at this point, maybe, you know, in terms of the trend being your friend, if you've heard that phrase before, the trend would be your friend all the way down here to say the trend was down. And then at this point here, there's serious questions being asked about whether or not the trend is actually to the upside, and to continue to rely on the trend that had been your friend for a long time was at that point folly. And what you'd be then looking to, of course, are significant junctures in the price in the past that you'd be able to make assessments off the back of. And here in the AMC chart, you can see that if I just remove these drawings here so it's less cluttered again, you can see the prices are currently at this point here, and you can look over to the left, and if you draw the line over to the left, you can see that at this stage there was, of course, previous activity on the chart. And if we keep going to the left here, thanks so much for the donation, we can see there was, of course, as well, significant happenings. We can keep drawing our eye over to the left here. We can see again that there was significant in the happenings on the chart. We can keep drawing our eye to the left, and we see again there were significant happenings. Thanks so much, Orphan Pipe. Really appreciated. That's super generous of you. I really appreciate it, mate. I hope you're doing that because you're getting value from this. Please, you know, people who donate to the channel, only people who are getting the, you know, I want this to be, thank you so much. I hope that's a positive affirmation. I really hope that people aren't sat at home thinking, what's he talking about here? Thanks so much. Really appreciate that. Encourages me to keep going. We can see here that, of course, there's these areas, and we can call those areas of inflection, or perhaps pivots in the market. And we could describe that, you know, that the prices, of course, changed. That was the starting point. But the prices obviously changed here at these areas that I'm drawing circles at. Now, there's obviously a distinct difference between the way that they changed, okay? The way that they changed at these points here, at this one here and this one here, we've got points where the prices went up from that area. Then, of course, we know that we can cover this later in terms of higher price action, but then the prices drop back down again, and then we can see that here, and here, the prices actually dropped down from that area. So we know this is a really significant price point for us. That's, and this is at a glance, right? Because you can see this, I think, if I take it away and reveal it, then this way, you can see that at a glance, right? And you might be then sat there thinking, okay, Rocky, well, that's an easy one for you. That cuts right through there. This is just super convenient. This is a wonderful chart for doing this example on. I can concede that, absolutely. Again, not contrived though. We can do the same thing, like if we imagine from when the prices were in this area, and we've been up there a couple of times, and that's of course in at around about $14, where we just were very recently, and look over to the left and kind of see that there was this price action just here, and that was below where we are at this stage. So then we can look towards where our next lows were at that point, and then measure that and kind of and see the aspect of where we are right there relative to the context of our shared history, right? And then we can continue that theme forward as we look over to the left and see the price history in this and how there was inflection points in this area, and it gives us an idea about the context of the past, and that happens at a glance as soon as you look at the charts, right? So what you've done in any given chart is you've decided like there was a trend at certain points, and you can see then there's a clear delineation between these three phases, if you like. So this first phase here, which actually arguably ended here or here in terms of the upside phase initially, and then this phase in the market where it went down, and then potentially there's a new phase. So the real questions on this so far, and when I've talked about AMC recently, I've said it's a value play until it isn't, and you can see now how I would be making that argument. Of course, GME, with its prices relatively speaking being up here in all-time high territory, you can't make the same sort of argument, but you can see here why I'm saying that, and that really, the prices carrying up to this point, they've happened very nice and very quickly, and I would like to see, of course, them to continue on the way, and that's what I'm hodling this for, because I think there's an opportunity here to do more than what's on the charts. But what's on the charts is still very, very clear, and everything's still coordinated and around everything that we've seen in the past, and it starts to reveal itself. You might be then thinking again, like, okay, so that's another sort of convenient example. How about, here's Bitcoin as an example of charts, and we can look to that's a habit of mine. We can look to price action in the past. For instance, when we came up towards different inflection points on the way up in a big trend. So we've got a big trend here in Bitcoin. That's been wonderful. We'd all like to see something, in terms of that magnificent upward price action similar happening over there on the AMC charts. And you can see, for instance, in the past, if this was just how the charts happened to be when you logged in and looked at them, you'd be able to make quick assessments based off of where the prices were. Say they were just at that point, behind my camera, whatever. Say they were at this point here, whatever. You can make this quick sort of snap assessments about where you are in relation to things. And in this point, of course, you could say during this period of price action that it was a sideways trend for a long time, with highs in around about 20,000 and lows down there at 3,000. And actually, arguably, that's true. But we also know that from the context within that, there was this 80% bear market during Bitcoin between 2017 and 2019, essentially. And then moving up the way, there was another interim bull market here, and then there was another bearish continuation, and the whole thing really stacks up towards being at the end of the bear market in many senses was here at the Friday the 13th of March 2020, and then things carried on towards the top side. But you can see that, and there's many ways that you can then go from that. So I think that's a pretty good start to looking at charts, kind of thinking to yourself, what are the different phases in markets? So in a way, you've got this ride up the way here, that's one, and then like I said, you had this downward trend here for 18 months. You had this upward trend just here. You had that downward trend just there. Then you've got this upward trend just here. And at the minute, the current debate in Bitcoin land is to do with whether or not this trend has ended. Okay, you know, that's the current debate, and whether or not then, of course, you would see a continuation towards the downside, or if we see recovery towards the top side. That's the current debate with this one. And of course, we'll know very, very, very well if we were to take out previous highs, because we can see where they are with our eyes just very quickly without having to sort of negotiate much with what we're looking at. You know, if, for instance, zooming on in a wee bit, we can see the current importance with Bitcoin right here at this area, just looking to the left, and we know that this is extremely important. Now, if when you get more advanced at technical analysis, you'll revisit this chart and have people talk to you about Wyckoff distribution, for example. You'll have people talk to you about bearish divergence, which you could see in these highs. You'll have people talk to you about pattern formations, which you can have here with this wedge I'm drawing on now, this wedge here. You can have people talk to you about pattern formations like the knot that you can see and the likelihood of dropping down to one. You can have people talk to you about using curves to measure out parabolic trends going along the way. You can have people talk about all numerous sorts of things, and you'll be able to analyze it back the way and add everything on top. But just in terms of like where you are now, that might be a very good first introduction to looking at a chart and understanding the phases. And that's the first question you want to ask when you've established that on any time frame. And that's what I'm going to go on to talk about next. When you've established that on any time frame, then you'll have the picture for the trend, which is going to inform you about subsequent timeframes, etc. At the minute, in terms of Bitcoin, we know that there's this phase in the market, and if we want to do what we did before with drawing lines down the way, and we drew one in here and said, okay, so this is clearly all up, and at the minute, if there's a debate about Bitcoin, it's to do with this section here, because that then is whether or not we get that continuation or we see that reversal, right? That's what we talked about, and that's what this question is about. So we know that this, of course, would be a bull trend towards the top side, and the question there, what? Ozzy, excellent. Tony, man. Tony, good to see you. Check out his glass, everybody, as well. That's how much I love Tony, by the way. Tony, man, fantastic to see you. Hope you enjoy your glass of beer next to your name, hey? So bear market, I happen to be writing beer at the time. Anyway, that's the question. Are we in a beer market or a bull market? And then, of course, that is a question of trend. And as a trader, one of the activities that you'll be performing is, of course, analyzing, identifying, and then, of course, adapting to any given trend. And that is going to be a key part of your activity. So we know that if this price action, it could be identified as being trending, how would that work? And that would be like, say, a high here, a low here, a high here, and a low here. You know, as a starting point, you've got what they've got these things. This is a high, right? Then that's a high. This is a low, and then the key is here. What you have is a lower high, a lower high, okay, and then at this point here, you've got a lower low, right? And that's the key hallmark of trends, is when able to identify a trend as having these features. Highs, for instance, in a downward trend, lows followed by lower highs and lower lows. And in an uptrend, highs followed by higher lows and higher highs, as you can see previously. Key information. So this is clear that one of your main activities in terms of your analysis, whatever approach that you take to use, again, whether that's wedges and patterns and moving averages and horizontal support and resistance, or Wyckoff analysis, Elliott wave, anything you happen to be using at any given time, your key component of the question that you happen to attempt to be answering at any time is, what is the constituent parts of the trend, and what is their orientation with each other, i.e. are we in an up or downward trend, and where are those feckin' highs and lows? And you can see that those are they there. So the question at this point then says, well, if we're going to get out of this, we're going to need to have a bull trend happening in this lower time frame. This is 24 hours. So if we zoom on down a wee bit and take a look at the price action which constitutes that area which is circled on the higher time frame picture, you can see here it's now circled just here. And is there a sort of trend on the go in that we can analyze in this period of time here? So we can say, for instance, here we've got these features, and what would they be described as from before? Well, of course, that is going to be like one of these lower highs. So that'd be like an LH, and that'd be like an LL if you want to use that categorization, all the way down. Here you can see that we have a high and perhaps a higher low and a higher high and a higher low. Now we know from the 24-hour time frame that could be meaning that could end up ultimately being rather meaningless in the scheme of things, because look, that's the chart in a bigger time frame. But we know then when we look down at the lower time frame that there's this potential for this to be in here, and it could be forming up a number of different features on this particular piece of price action, which could lead to continuation. Okay, if you were therefore to be getting bullish at this point during this, what is conceivably, of course, a downward trend, that would make you kind of doing one of two things. Either you're thinking about this as a reversal trade. Okay, so this is to answer one of Apple Blossom's questions earlier. You'd be thinking about this as a reversal trade. You'd be taking a reversal against this trend, which would be a counter trend move. Or you're thinking about it as a continuation play on the larger trend. I'm making the supposition, I suppose, that this ultimate low here is just a higher low, and that what we had was a low and a high and a higher low. So 1, 2, 3, you know, like that type of idea, okay? That's what you'd be saying. And it's always a matter of perspective. And a lot of that then can boil down to how you're looking at the particular areas and nuances of what you're doing at the time. That is quite a good starting point then to say, well, how could I take it one step further? And on this particular chart, you could look at this area a number of ways. If I just ditch all of those drawings so far, you could be looking at this area just here and asking a question about whether or not this is a head and shoulders pattern. Right? You will hear about when you go out and investigate a thing called patterns. Okay, you may have noticed the pattern in the name in there. So you might go out and look at patterns out there, right? And then there's other ways that you could look at this information just here, and that could be with these things called momentum oscillators, which we're going to call MOMO for short. And when you talk about or hear people talk about momentum or MOMO oscillators, what they may be looking at would be for potential signs of a reversal against the trend by comparing the information from this prices here against each other in a different way than just stacking these up in these particular candles. Okay, so we know how these candles are constructed. These candles are constructed like this, where you've got a body and you've got a wick, perhaps, you know, not guaranteed. And there are other ways of constructing candles. One of them is Heiken Ashi. And you can see here that there's suddenly these candles, which are showing the same price information, are showing it in a different way and colored differently. So there's something else that you can look into at some point. But this is showing us the price information on a chart. And it's the same numbers that are being input into working this thing out. It's just with a slightly different outlook on that. Here's the bar chart, funnily enough. These are called bars, these sort of lines. And this is the bar chart. And you can see that it works slightly differently. You've got these lows down here that extend past the connection point. The connection point showing you from the candle to the left to the right where the open was. And then the candle connecting from the left to the right, evidently where the close was, in that sort of open close type idea. And then the wicks shown by of course the distribution above and beyond those 2 points. And a lot this is actually was more popular up until maybe the last 10 years as a way of looking at charts than the candlestick one, although, you know, depends who you ask. Okay, so there would be a few different ways for you to look, and oscillators do much the same thing, but they don't put the price information onto the chart itself. They look at in terms of price action oscillators, certainly, they look at the prices and they do a calculation based off them to come up with some numbers. So one of the ones that I like to look at, I'll just take the sort of standard ones here to show people, would be the relative strength index, for example. And you can see here that it is showing us a similar looking movements in prices, similar looking chart down here to what's up here. Similar looking, that might also be a little bit overwhelming. I understand that to new people, in the sense that, look, it's at a high up. For instance, the prices are high here and they're high here, and it goes low here and it's low here, and the prices move up and this moves up. You see how it kind of follows along like that. Then here you can see these peaks and troughs kind of mimicked down below, and then you can see this movement downwards, and how this is performed, and it's moved up quite a bit in this period of time. While it's not a perfect representation of what's up above, it's similar. And it would need to be different, right? Because what would be the point in just having the same information? Am I right? So it's in those differences that we learn about what's going on. And there's calculations, and I talked about this extensively in yesterday's episode, for example, about how you work out the maths behind these things. Suffice it to say that when you take information which is shown up here and display it in one way or another, whether that's using candles, bars, lines, line charts, etc., you're displaying ultimately price, and you're putting it into a context that we can understand, which is better than 10, 11, 1, 2, 2, 2, 1, 2, 1, 11, 2, 2, 1, 10, 10, 2, because working out just a string of numbers like that would be a bit difficult. And we can do the same thing when you're thinking about, well, what's the difference? So if I did just spit all these numbers out at you, I was reading them all out: 69, 64,000, 62, 61, 64, 52, and then 57, and 47, and 56, you'd have to build up a picture, and it wouldn't necessarily look like this. The picture that you'd be building up, if I was just spitting all the numbers out at you, might look maybe a little bit more like this, in terms of how you'd be thinking about the differences between the highs and the lows and all of that. So there's a good deal of mental reasoning which can be saved by using oscillators, for example, to look at how these prices are really moving down here, and if in that sense they're achieving what we would want to see if we were, say, for example, bearish on this and we wanted lower lows. And at this stage we'd be wanting to see, if the prices are going lower, that this other representation of those prices were also going lower. For example, thank you so much, Mining Boom. Super happy to have you as an early supporter. Really appreciated. So you'd also be wanting to see that this oscillator down below was also moving lower if the prices are moving lower. And if they weren't, then there'd be an incongruity there, and it would be maybe like, the incongruity that exists whenever your mum, when you came home from a night out with your friends, says, "Have you been drinking?" And you say no, but then fall over and puke up in the plant pot, and she knows that there's something going on. Well, the same sort of thing here, in that sense that you're looking for these incongruities, okay? And this is one of the beauties of then what we call technical analysis, when you get up to a better level of doing it. But you don't need to rush into that, because we already discussed a lot of that at the start of the show. Okay, so then, to kind of finish up for today, I suppose, in terms of the lessons or whatever, there was another discussion that I'd had with, and then we'll get around to talking in the chat, right? And hopefully then we'll kind of go over what I talked about, do a bit of sort of Q&A on it, etc., if we want to, and talk about price action and whatever else, and talk about, any suggestions that people have that they want me to talk about for current live price action and whatever asset they're looking at. Even if the markets are closed, I'm talking crypto, anything, whatever you want to talk about, it's all good. We can do all of that, right? So I was going to talk about the other thing that somebody asked, and that was, of course, the MACD. Now, Jimmy did a fantastic job talking about the MACD earlier on in the show, and I just thought, well, I'll just also do that as well, because why not, right? Why not add it on and just add a couple of extra little sort of tidbits there about the MACD as well. So here's the MACD. The MACD is an indicator, and I just added it to the charts. If you want to add your own indicators to the charts, by the way, you hit this F button up top here, F plus, it's like, that's what it looks like, or FX, right? And it's indicators and strategies. You hit that and you can choose them. And there's lots. This is one of them. It's called the moving average, convergence, divergence, and this shows you the literally it's actually one of the more better named indicators out there in terms of telling you what it actually does. It shows you the moving averages, convergence and divergence. So to explain that, I'd have to kind of show what a moving average is, and I can do that dead easily here by just flinging on a moving average onto the chart. So I'll just stick on a couple of these here, moving averages. So I'll just stick on a moving average, and I'll hit the button twice, so I get 2 moving averages. And then the way that you'd edit, so I'm trying to integrate the whole just like familiarity with TradingView as we go along here. That's partly why I wanted to do this extra little bit of a lesson here, just to show you this sort of thing. So that's how you would add an indicator, and then this is like how you could edit an indicator that's on the chart. For instance, you can go over here where you get this little eye symbol for hide and show, so like that's handy, and you get this settings thing. Oh, Orangatangled has become a member. Thanks so much for joining an early supporter, you lovely monkey. Yeah, thanks so much. So then you can change the settings by hitting the wee settings cog next to the indicator, which is listed up here on the left. Now, if you can do the same thing with indicators that are down below by hitting the settings cog next to their name as well. For instance, over there, you can also double click on it, etc. All those sorts of things. But here you can see there's a new line on the charts along where the price action itself is. The price action. When I say price action, what I mean is the candles on the chart there. Sorry. So you can see this new line here, and I added 2 of them. So let me just change the settings of one so that you can see where it is, and I'll change the color so make it red, and I'll make it a longer moving average. So what I mean by that is I'm going to extend the length of it up a bit, right, in terms of the numbers. So I'm not going to get too confusing. If that was a bit confusing, don't worry, I'm explaining this in a second. I'm going to stick this up to a higher number. Let's stick it to 50. Okay, so I've just changed the length of this moving average to 50. It's a simple moving average. What that does is it takes the average of the prices, which are obviously shown here with these candles as we spoke about earlier, the average of the prices over a period of time, in this case the length, and that's 50. So we're on the 4-hour time frame, so this is looking back over 50 periods of 4 hours to calculate this red line, which is a moving average, which is an average of the prices which moves in the sense that as the price itself moves and changes from one day to the next, so does the moving average. Another representation of this information that we see before us in a slightly different format. The calculation to derive this information is from the prices, in the same way that this information and the information below is all coming from this information up above. And it's a way, therefore, of taking that broad picture that we were looking at before and putting it into a greater context. In this, thanks so much, Max. Really appreciate you joining as a member and early supporter. Thank you so much. Really appreciated. So as you can see here, we have got 2 lines now. One of them is a shorter period moving average, in this case 9, and this other one is a longer period moving average. I'm going to change this from 9 so it's a bit longer so that you can see a little bit more of a dynamic between them, easier to understand. I'm going to stick this up to something like 14 instead, just so it's a bit more right. Thank you so much, Max, as well. I hope I didn't miss somebody earlier. All right, I got that person too. Thank you so much, guys. Right, so you can see that the red one is the longer one, that's 50, and this one here is set to 14. That's the blue line as it's moving around. Now, this can be incorporated into many analyses that you would be doing. If you were, for instance, looking at their moving average crosses, and this is something that gets asked about a lot, then what that refers to is the cross between 2 moving averages. And you can see that happens here and here and here and here, etc., so on and so forth. Now, in this cross, we can say that it was a bullish cross, right? This is a bullish one, because right, because the shorter period moving average crossed over the longer period moving average. So when you're looking at a shorter period moving average crossing over a longer period moving average, what that means is that recent price action has been performing better than all longer price action has on average, which means to say that the prices are moving upwards because on average they're getting better, and that's represented then by this cross happening, and that's of course a function of recent price action operating better than price action over a longer period, and that results in a cross. And of course then likewise here we have the bearish cross, and that can be sort of skull with crossbones type idea, right, for that one. So you've got the bearish cross over here, right? And what that means is that the price action recently has been, compared to the past, this price action recently has been operating then worse than the price action has on average, which means that you're in bearish conditions for a while during a phase when there's been a cross like that. The when these would say that the cross happened is when the cross is actually showing up on the charts. That's when the cross has happened. And then the way that you describe these would then come down to the moving averages that you're using. If under almost all circumstances, if you hear somebody say that they're from a professional background and they're talking and they're not putting any context on it, and they say the words golden cross, what they mean under that one, when there's a golden cross, it is the 200 and the 50 crossing. Okay, that's what the golden cross is, and the death cross is the 250 crossing in the negative way. So the golden cross is the bullish case scenario, and the death cross is the bearish case scenario. But often when you hear about people doing analysis out there, they'll say, and there was a death cross here, for instance. They might say that referring to these two, and that's going to just be that sort of their own vernacular, if you like, right? That's what that is. But in terms of what this really means, etc., that's that. Now that's moving averages crossing, okay? And as you can see during this phase of price action as well, that the moving averages had different slopes. And as a result of the different slopes, you could see that there was, of course, a bigger gap between these moving averages just here. So one part of when you're analyzing moving averages, it comes down to the slope. So looking over at recent price action, for example, with Bitcoin, we're just coming into a cross. And of course, there's a downward slope here on the 200. And there's an upward slope on this one, as you would expect during a cross. But I say that, but it's not necessarily the case. As you can see here, there was a cross here with a downward sloping and the upward sloping, etc., and then the cross right back again. Because while you say that, that kind of flatters to deceive. Because of course this was, it was hardly moving up and this was hardly moving down, yada yada, and the price action itself. And this is why then we'd be looking at it. Obviously, you'd be looking at this and saying, well, hold on a second. This is not as different. Like the price action itself hasn't taken out previous highs, yada yada yada, kind of doing all of your analysis. That's where analysis comes in. There's kind of at a glance and then you analyze it, right? So if you're going to analyze it, then those are the things that you're going to want to kind of brush up on in terms of your skill set, etc. So here you've got a cross about to happen between these two, or else it has happened. I could zoom in and find out. Just trying to make a kind of broader point here that you're looking towards the slope as well of these moving averages, and you can bear in mind kind of how far away they are from each other, or indeed then, of course, by virtue of the fact that this is a small moving average, how far away the price action is from a larger moving average. It's another thing to think about. So you've got three components really, which is, of course, whether they've crossed, their slope, okay, and as well the sort of the distance. How am I going to represent distance? The distance between the two of them. I don't really know. Okay, so there we go, right? Now that as well, that concept is represented somewhat in this indicator down below. So I'm just going to remove I'll just hide the RSI for now as we talk about this, just to demonstrate hiding something, etc. So we can see here that there's a few components to this thing, and it's called moving average, convergence, divergence. And what we have, of course, are a couple of lines. Daniel just said, so all this time when my bros were peeing on me saying it's a good thing because it's a golden cross, they were lying. No, they weren't. What they were talking about, what they were talking about was how you're going to grow up with a nice full beard, man. That's what it was. That's what they meant. It's going to just super good for your skin. They were just trying to help you out, sort of homeopathically. I don't know if you hear this.
So all this time when my bros were peeing on me saying it's a good thing because it's a golden cross, they were lying?
Right. So this shows you the moving averages, and it says the convergence and divergence of the moving averages. And it doesn't show you that. Sorry. This shows you this is the MACD. This is the MACD, right? And the MACD, and it has two components. Let's call it 3 components. Let's call it 3 components. You've got the histogram. Jimmy explained this earlier on. The histogram, that's these bars here in the middle, and then you've got these 2 lines. The signal line, and then the MACD, sort of the line itself. What's it calling it here? Fast length, slow length. Is that what they're calling it? Right, sound. Different names, different places, doesn't matter. And what this is made up with a couple of different components. The 26 here, the slow length, is the 26 period moving average essentially. On a here is the 26 period moving average, not related in terms of absolute price. It's just all right, whatever. And the fast length is a moving average of the moving average. Right, it's a moving average of the moving average. So we've got a moving average, and then we've got a moving average of the moving average. So when there's a cross here between these two lines, you've got the moving average has been overtaken by the moving average of the moving average, right? So when you see a cross with the this is, I know it sounds silly, but this is why a lot of people don't understand it, right? So you've got a moving average, and then this other line, which is a moving average of the moving average at a shorter length. Okay, and when the itself is doing better than itself used to be doing, then things be good, bro. When itself isn't doing quite as good as it used to be doing, things might not be so good, bro. That's the basic underpinnings of that concept, and we can then use this and see the distance between the sort of the differential between these two is represented in this histogram. Okay, right, nice, interesting. So then what you can then do as well is you can look at this thing and you can look for divergence on between how this is performing versus the price action. So as you see, these lows came in here, and the lower part on the histogram was getting higher. So when people look for divergence on the MACD, they're looking on the histogram element here, like I just drew in, and not on the lines part. So for me personally, as I trade, I tend not to use the lines at all, and this comes down to personal preference over a long period of time. Jamie TradeSpawn, for instance, does like using the lines, and it's quite straightforward. Why? Because as he explained earlier on, you stick on a nice big moving average like the 200, for instance, over here. Put that to 200. That red line will now move. And you can see that the price action is above it, and that while we came in for a positive cross here, that it isn't necessarily a signal that you would take on this time frame in this setup, because we're below the sort of our sort of qualifier line as to whether or not we want to look at this blah 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 blah, right? All those sorts of things. And as you can see, if you had gotten in that cross, while there was a bit of nice positive movement, etc., we don't know yet whether or not we've turned the trend around. So this is quite good in terms of kind of trying to catch those broader moving trending moves, if you like, in that sense, if you will, if you would, etc. But I tend to use it for divergence, which means that when it comes to the settings on this thing, what I do is I go to the style and I just pop these two off. So, oh, that's MACD and signal. It was showing us the MACD and the signal line. So you've got the MACD line and the signal line, etc. Right? So the MACD being the moving average of the right, whatever, right? So that's all good. And then, so then when I just have that on, it's not influenced by the two lines in terms of how it's displayed to me on the screen, which makes it easier for me to see the divergence, because when I'm looking for it, I'm just primarily interested in the divergence aspect, which means to make that more visible for me, I remove the other lines. It's not like I'm dismissive of the other lines entirely. It's just that used willy-nilly, on a it doesn't add to my analysis that I'm already doing. Sort of the way that I've worked out my analysis and what I do on YouTube doesn't incorporate that as part of it. Cool. So that's also that moving average explained, and I really just kind of used that as an opportunity to show moving averages, and then get round to talking about this one and show that the two lines is a moving average of the prices, which is then got a moving average of the moving average, and the MACD, the whatever, right? Good, all that good stuff. There's also a calculation for MACD, which I should have thrown up there during that little section, which shows you kind of what I was trying to get at there. Hello, face. There's a man there. 12 period moving average minus the 26 period moving average. Oh, sorry, that's what I meant to be saying. The MACD is the 12. That's, oh god, I explained that badly. Right. I explained it badly. Going back over to the charts, I could just say this real quick. That's what I meant to say and everything. I needed to see it in front of my face. Aye, so yeah, the MACD is a moving average of the 26 period minus the, that's why it oscillates here, but minus the 12 period. Is that what it said here, just out of the box settings? 24, 20, was it 20, 26 to 12? Yeah, 26 to 12. You can obviously fiddle around with those things yourself. You find that decent settings, but the way these things generally work out, speaking work out the box most of the time is kind of those settings that are good enough for you, really, unless you know kind of what you're looking for to change. So you've got the 26 period minus the 12 period, which shows you a number, and of course, as these two then would be getting together. So if I just represent that in terms of the moving averages themselves, which is what I really kind of should have been doing before. So the purple one is 26. The other one is 12. And then we can look and see how close together and far apart these moving averages were getting, and that information would translate into here in terms of the MACD and the signal line, because because it's a moving average of the moving average. Okay, of the difference, the moving average of the difference between these two. So the difference between these two, as represented by the histogram, is what I'm kind of looking at mostly. Whereas if you're looking at the signal line, the MACD line, then you're looking at the difference between these two and whether or not the moving average of the difference between these two has crossed over or not. So you're kind of applying a trending aspect to that, and that's what the crossing aspect's for. Whereas I'm kind of getting that information, deriving it from the charts anyway. And people familiar with the channel will have seen that I tend to have a number of moving averages on the chart at the same time. So I'm kind of feeding that information into there in a different way, and then looking at the histogram down below with those lines on there is less easy for me to see than when I take them off. And that's everything on that front. Great. So now I can catch up with the chitter chatter. Let's bring up the big old charts over here so we can get the sort of the what was the, so now we're pod racing, that one. Okay. Nino, says the ambulance outside. Worth his life. Yeah, I wouldn't trust Ortex. Lol. Yeah, I wouldn't trust them. I wouldn't trust anyone. It's hard for me to trust anyone and all that. So what do we see looking up here? Space Captain. I plateaued for a while in my TA knowledge from Wall Street Bets and Superstock, but all of this has brought it to a new level. Can't wait to see what else you guys are cooking up. Well, that's fantastic. Thanks. That's great. I'm super glad you're getting from both the channels as well. Tradeswell puts out some wonderful content out there. If you happen to be watching along now and you don't know who he is, although I dare say it's highly unlikely. Chris M could not comment the both of you more. Could not commend the both of you more, if I could read. The amount of knowledge and wisdoms you display really shows the hard work and time spent behind it. Oh, thanks so much. Really appreciated. Up here we've got Rocky Outcrop. This is so well explained. Oh, thanks, Kaz. That's great. Thanks, mate. Just looking back, I you know what I'm doing right now is I'm looking back to see specifically if any comments jump out at me as being like, you know, could you explain that more, etc. And I'm looking there and not seeing any of it. Seeing happy customers, right? Fantastic, excellent. Everybody's dead happy. Well, that's good. Well, I think that was time well spent then overall. I hope I helped some people then, maybe in a way that they didn't expect. Even if, you know, you've been trading for a while, just to kind of bring some ideas together as to how you might, you know, approach a chart. Like, so the learning, don't let me off the hook here, ladies and gentlemen. The learning outcomes what were they? They were so that you'd be able to look at the charts and have a rough idea of what you're looking at, be able to kind of get an idea of identifying the trend and what you would, maybe some steps that you could take to do next to identify where we are with it. So I think I kind of covered that a lot with regards to looking at the potential of whether that could be turned around on Bitcoin, etc. Looking at AMC and seeing where we've come in terms of our historical support resistance, the significance of that. I did mention at one point how GME was in all-time highs, and it changes the dynamic of things as well, of course, just not currently in all-time highs. Obviously, we know that the prices were there, but in terms of what I was talking about before with the broad let's just stick it on like the weekly chart here. So you got tons of information, and you can see that this is everything that was GME, and this is now GME, you know. And I think that's one of the simplest ways, you know. A lot of the conversations that I have with people when which I don't actually have. I mean, it's kind of an imagined scenario, actually, to be honest with you. I've not had any that are like this, but I imagine myself having a conversation with somebody out there who's telling me that I'm stupid for looking at GME and talking about this thing as if this somehow represents one thing always. And for me, I think it's quite clear from a really broad stroke picture that there's something very different going on, you know, just from a very broad stroke picture. And I like to talk about this in terms of, you know, for people who then want to continue that conversation about how in this phase of time here and upwards, there's been a lot of things happening with regards to like the likes of Ryan Cohen, etc. But not just that, but the plans and everything that's gone into this business and how they've executed on them in terms of, you know, for instance, having their share issue when the prices were way up here, clearing off all their debt, radically transforming everything they're doing. The share issue, in a way, to me, was kind of like reaffirming your vows for like a married couple sort of thing. It was kind of like a second, if you like, symbolic IPO. For me, it's like the birth of a new company overall, and that's what I was trying to talk about before as well, that to put the idea into people's heads that this is not some, you know, resuscitation of a dead corpse of a company, you know, some dead dog in a manger. Absolutely not. This is a renaissance, if you like, and that's what that IPO for me symbolically represented with regards to this company, and how as well this new dynamic that it's bringing in here deserves this representation on the charts, you know, and that we're looking at a new thing. So I like that. I like the stock, you know, I like it. So that's what we're here for, the next challenge. We're on to the next challenge, I suppose, at the minute. And I suppose as well, since we're over here in the GME charts, I could, what did I just do there? Did I add an alert by accident? Hope I didn't. I hate when I do that by accident. So we could look at the GME charts a little bit more and kind of just apply some of the, you know, just you know, show you then what I look at, and appreciate with you for just a second the difference, and understand, I suppose, if I could just get that one. I'm really kind of sorry, just let me satisfy my OCD for a split second here. I'm totally not OCD normally, but right. If you you know, I just appreciate, just for me to kind of see that, and in terms of the learning outcomes from being a subscriber to this channel, then, if you like, right? So we talked about the what it is to go from not really knowing what you're looking at with a chart to hopefully having some understanding. And I invite anybody that watches that section of the show, whether that you've just watched it now or you're watching this replay in a future date, to get in touch with me if you feel like there was something along the way that occurred to you and I missed, or indeed a moment or a piece of enlightenment that you went through and experienced that you could share with others, because far be it from me to say that my metaphors, etc., are anywhere near the best. You know, there's ways of expressing things and insights that people have that I don't know, you know, and I'll be the first to tell you. From a broad perspective, when it came, one of the things then, I suppose, that we can talk about that you'll be learning about by being a subscriber here is to understand, you know, for instance, fully Fibonacci retracements, for example. And Jamie was talking about them in his live show today. Oops, and you know, I always make little mistakes here and there as I'm putting things on. You know, there I put on the long and short tool, or the long position tool instead of the Fibonacci one. Yeah, irony, huh? Anyway, you'll be learning how to use them perfectly. If only I could select them from the menu perfectly. Then and understanding things such as the key areas to be drawing them in between in order to analyze price action, the key areas to look out for on the Fibonacci's in terms of likely retracement points, the key areas to look out for on extensions in order to kind of target price action in the future. And one of the reasons why I do this is I use Fibonacci so often in the channel is because they so often overlap with other areas that I would be trying to explain in one way or another anyway. And it's useful in that respect, at finding at a sort of early doors confluence that gets a message across quickly. You'll see a few things, by the way, when I do Fibonacci's, that I'll draw them in places where they don't necessarily overlap the charts, and I'm very particular on here whenever I select where it comes from, and I pay extreme attention to where the crosshair is. And where I can see when I'm looking there is that there's actually just here, just below my finger, a wee faint line you might not quite see. Now I pay particular attention to that because obviously it does matter, especially when you're on the log chart, and you appreciate that the difference from down here to up there is vast, you know, in terms of a few pixels off. So I do try to be particular, and then I would then line it up, and what I'm doing is I'm lining up with this low over here, for example, but drawing it on the left. But most of the time when I'm drawing it in really on screen, I'll draw it in from there up to the high, for instance, and overlay over the price, just for sort of convenience sake mostly. As you can see here then, with these areas I'd already outlined and explained in previous shows, etc., that the two boxes where the price action is represents actually also the recovery stage after the pullback down towards the 236 from the broader perspective. And in the future you'll understand what that means, and then as well over time, of course I'm not going to explain these two boxes right here right now, but if you've been watching over the last couple of weeks or whatever, you'd also understand, like, I think I did, I'm pretty 90% sure I drew these in on screen, etc. Then I'd have explained that at the time, most likely. You know me, I tend to. So that's where we are right now from a broader point of view, and that's one of the tools that I use. Another tool that I use is the RSI. Now, the way I have the RSI set up is different to what you just saw me using when I introduced it, and a couple of reasons for that. In the background, you've got these boxes, and then a lot of people have them drawn in different places. Specifically, people like to talk about the RSI being in oversold conditions when the prices are above 70 a lot of the time, and you'll notice that I've put mine in here at 80. I tend to look at more volatile markets. I spend a lot of time in crypto, and I bumped up this zone here a bit higher. Equally, I've also bumped this zone a bit lower on my particular one. Thank you so much, Azazil. Pardon? Thank you so much, Azazil, for becoming an Outcroptician. That's really fantastic. It's not. It's the middle level. It's super excellent. Thank you so much. Really appreciate it, Azazil. Wee. Thank you, mate. So I've positioned these slightly differently. So anyone using mine, you'll notice that it's down at 20. Okay, so this is actually a key component. Really should explain this to people, but it's kind of okay in a sense that I don't, right? Because what you'll find is, and this is a good opportunity to answer another question that was submitted recently. And be aware, people, you can submit. I'm currently taking questions for this type of thing. I'm doing it in a minute. There's these things that people talk about when it comes to these oscillators, and it would be oversold and overbought conditions, OS and OB, oversold, overbought. When the prices are up in these high areas, people tend to say that the prices are overbought. And when they're down in the low areas, they tend to say that they are oversold. From a textbook point of view, really, you're talking about overbought being within this zone and oversold being within this zone. But I actually have these extended out a wee bit, because if you were to simply try and trade against the trend, and you were looking at the RSI, for example, here on the weekly time frame back there in October, and that you might have been like a hedge fund thinking, well, it's in oversold conditions, things are totally going to turn around on the trend on this market, etc., and then missed out on the prices going towards the top side. And you know, it's just this sort of thing happens, in my experience, more often than people really see it happening. From a newer perspective, it's probably just like kind of pushing your expectations a bit further than maybe otherwise would, which will maybe change your perspective. Maybe it's not good of me to kind of influence people without explaining them in that particularly really detailed way, like I've just been doing there now, though, so at least I'm doing it now. But then in crypto markets, I think is also another thing, it's just something that I do. Now, you're free to change or to not use this thing or whatever, I don't care. It's all good. They also notice that there's another thing here on the charts. You've got this line and it's changing colors in here. It's going red, blue, and it's moving along. What is that? Well, that's a moving average. In this instance, is an exponential moving average. Exponential moving averages take a greater weighting from recent changes than simple ones applying an equal rating to any bit as it does the average, whereas the exponential taking on greater weight, adding greater weight to the calculation for recent price action. So it moves quicker in that sense. If you want to think about its movements and the speed of those movements in that sense, that's what that means when people describe a moving average and how quickly it moves if it's exponential versus simple. And in this instance, you see it's blue when it's moving up, red when it's moving down, just giving you an indicator based on the trend of the moving average itself. We discussed this when I talked about slope with regards to trend, and we also talked then about the cross as well, and I talked about moving averages as well, and you can see that that happens there. And then I suppose there's an aspect with regards to how far away it is from the price action, but that is not something that I'll talk about a massive amount, because when it's doing these sorts of things, it's obviously expressing quite a good degree of movement in the prices themselves, and you'll be looking towards other factors necessarily, of course, aware of where these things are, but namely you'll be looking at your previous lows in terms of the RSI, as if you think about things in terms of having levels, and you can absolutely draw levels in here, horizontal support and resistance levels. So after a certain point, it's more about slope, and then of course the distance away from your previous low, which is quite readily identifiable when you look at the moving average itself, as opposed to, anyway, I digress. Right, so that's the RSI. I also use the stochastic. I'm not going to break this down in the same way, but there's less to tell you about this one in terms of the differences. I just put on an exponential instead of a simple moving average on there, really is essentially it, and then color coded it a bit better. I use the MACD, and that'll do in terms of talking about those ones on the lower side, really, for just now. And I also use the DMI. Now, the DMI is probably my favorite indicator, and here's one that I've styled up the way. Interesting. And it's got various different stuff, and you learn how to use all of these things together, and of course looking at volume, etc., as well, by subscribing to the channel over time. I mean, sort of whether it's latently just over the period of like looking at me talking about it for a year, or through, you know, direct pursuit of further information based off the things that I've said or whatever, which of course you're absolutely welcome to have your own approach to and understanding of. And what I try to do really overall is make it in a way that integrates well with what you do in your own analysis. Okay, so you could absolutely be coming at this from a completely different perspective to me, and looking and saying, well, what's Rocky think about this from his way, and it'll not step on your toes, because I appreciate that there are of course dichotomies of understanding out there, and at any given time the representation of the trend will obviously be completely subjective as to what you're looking at the time, and it might not be the same as me, and that's fine. And of course then you can often have instances where somebody has got a position which is relatively counter to the other person's position, and ultimately at the end of the day they both end up making money on that front. If there's anything that I would kind of at the minute, you know, have been talking about in terms of stuff that's maybe going to be jumping out before I jump back into the chat and just catch up with you, is the grey shaded area on the DMI. We know the prices pushed up a lot, everything's fantastic, and for me personally, I'd love to see the prices, you know, drop back down a bit and then boost on up the way afterwards to give like and boost up, like, you know, just to keep on doing this overall, so that we don't get into too much of a situation where things slip away too much. Overall, you want to have a degree of mission creep. You could have it when things go parabolic, right? When things go parabolic, it's like being a teenager, or whatever, where suddenly, you know, everything's going along nice in your life, and then hormones kick in, and suddenly you're like saying F you to your mum, etc., and everything goes really, you know, changes really quickly in terms of how they think about you and your relationship with them, and everything gets really kind of building up to a point where eventually, you know, you go to family therapy and everything kind of goes back. You know, maybe your mum's screaming at you about how she wished she never had any kids, and you're telling her you wish she'd never been born, before you can go back to being like on an even keel again. It's like that. That's what being going parabolic's like, you know. Instead, it would be better to have perhaps a more sort of mature relationship with things, where you're, you know, where there's ups and downs, sure, but at never at any given stage, you know, do you have to go and like check in with the counselor. That's what parabolic movements are like. If things get extreme with things, though, then yeah, I'm on for the ride 100,000 million %. I'm looking for it. I'm happy enough to see things moving along in a sort of natural way in the charts, I use that very loosely, that term natural. I want to see things getting like hugely, you know, massively hyped and whatever at extreme points of potential reversal in the markets, etc. And I tell you what, Jimmy's really done like hit home run after home run when it came to doing that recently. I'm very super impressed with his enthusiasm in that, and I love it. I would be a little bit, I would be happy enough to see this indicator here play out in terms of showing us that we could get a pullback back to the area, back to around about the area where it was when it left off, which could be any of these three areas, because at the minute, you know, any of them. So we could go down to the 186, 170 area, could go to 213, etc. All that could happen, and I'd be happy to see it happen, because all it for me would represent at the minute would be a buying opportunity really overall. Now, if we don't do that, then that's fine and totally fine, because ultimately, who knows? I don't put a date on when these things happen, and it's also got a gap here as well in amongst all this mixture, you know, and those gaps don't need to be filled right away. Some of them live on the charts for years at a time before getting filled in, you know, that can happen for sure. So I'd like to see that with it, and this operate as a breakaway gap, and this kind of give people a false sense of security about a return back down the way. But of course, that's going to be about how time, you know, kind of plays out with this one, you know, overall. We've got these big bits of resistance up above that we want to burst past, and you know, when we do, the reason I'm sort of talking about it sort of consciously like that is because when we go up to these areas, we're talking about paradigm shift type stuff, you know. Breaking past this is like paradigm shift type of mentality, because when we look at this from the very broad perspective, and I already explained how there was this life of this thing, and then a point here, and then this new company, and then this sort of symbolic IPO, etc. I mean, I'm happy to see this live in this area as long as possible. If it doesn't ever go back down here, brilliant. And then when it does go up there, great, because all it means is that everybody out there that's like waiting like for one paycheck to the next can afford to get in and doesn't have to do things where they like, you know, where they feel like they need to like go on to use extreme leverage or whatever. I'm happy enough to be patient. I'm with friends, you know, enjoying the ride all the way, and that's for me great right now. So I'd be happy to see that happen. But if it doesn't happen, I'll be ecstatic. I'll be over the moon. It'll be hard to compare, you know, complete over the moonness of one form to complete over the moonness of another form. You know, I'm already over the moon as it stands anyway, so I'm kind of more or less. What am I saying? Like, I'm happy. Everything's great. So that's maybe all I should have said. I should have said, lesson for today: how to be happy and just accept things as being great. That's what it should have been. Cut out everything in between and just said, man, things be golly gosh good, great stuff. Jobs are good and great, jolly good. Anyway, yeah, should have just done that and gone, wow, amazing. Don't even need that moving average on there. Even better. Yes. Excellent. How is chat? I hope everybody's getting on all right with slow mode. Let me know afterwards, by the way. I think when we get to like 1,000 live viewers or whatever, slow mode will be a thing that's necessary, I suppose, or whatever. But at the minute, maybe it isn't. Maybe it's annoying you. So let me know if it is. Hedges should have covered in January. This will hurt so much more to the moon. Absolutely, they should have. You see, the longer that the prices go in this sideways movement, then the longer you've got, like, you know, what you want is to have a wee line here attached to a fisherman. Is this going to look like a sort of silly drawing? I don't know. So he's fishing, and like you want to have all of the little, all of the hedge funds come up and nibble on our fishy thing as long as possible, you know. And it's great. It's great. I suppose it is quite like fishing, really. It is great if you go out to fish and you catch a fish in the first couple of minutes. and you get a big smile on your face. It's great, I know it is, but then at the same time, we're there for all day and all the rest of it, and we want to get as many of the old hedgies in here nibbling away, and that's kind of what happens in anywhere in this region, you know, anywhere, even up as high as this area. There's still like this huge belief that they're right and we're wrong, and frankly, when we're looking, you know, this isn't like one of these old wars where you just have to take out a couple of city states and you've got your country over here and there's this other country over here, and like you're like, oh, we're going to invade this country by just taking out these two city states. No, we want to take this entire thing, you know, the entire thing, everything, all your base belong to us, all your base, you know. So the more the fishies come in here and that, then the better it is for our sort of war effort, if you like, which is my TA on this one. Head exploding, but good stuff. Oh, Cass, that's awesome that I actually managed to get you to have a full head explosion experience and survive to tell the story. That's the best. Trade spotting, was that the fella with the pipe earlier on? I wonder what that chat's about. No, Chris M, we didn't sustain 1000 long enough, apparently. That's right, you're talking about Jimmy's Dalai Lama story. No, Jimmy actually saw, I mean, he's got the proof, like he said, he's put the proof in the Discord. On his end, it says peak concurrence 993. It's just, I just don't know. I guess it adds it up funny. You know, it says to us watching it, stick another number onto that because it's more than that, and it doesn't quite get it right. And then afterwards it tells him, he's got the proof there. We needed it 7 more, and you'd be able to hold him to account, but 7, it's tight. Rocky Outcrop, hey Rocky, I'm pretty sure that Citadel got liquidated today, legit. 13F showed it, right? Interesting stuff there. Jack Smith says, Rocky Outcrop, hypothetically speaking, if you had wrecked bags, oh, that's that, at 2250, that you would rather spend on a possible GME dip, would you hypothetically, of course, hold them a bit longer to get more ammo for GME? I see what you're saying there. I mean, there's no way for me to answer that without having a look at the rec chart, even if I wanted to kind of, you know, even if I want to ultimately turn around to you and say no. Or whatever. Oh, I can see why people are looking at this one. I can see why. I mean, this was the low risk move, matey, in terms of this chart. Just looking at the current price line, you know, just in terms of what we discussed already, in terms of looking at a chart. Hopefully some people who are new to trading that have benefited to the extent of, or, you know, from what I've watched from earlier on, to be like, okay, right, might not be going on to write a doctoral thesis about this one, but at least I can identify that this was the low risk move from where we are now, based off of this potential for us. But in the meantime, this is like a bear flag. That's forming, you know, a movement down the way with this here is like bear flag from the world of bear flags, at an area of potential. I mean, I like with doing zero analysis on this, for me to say that that people, whether, what's my assessment here, are people de-risking, which is what you're asking. Are people de-risking in this area is what you're asking me, and I can wholeheartedly say, well, yeah, man, of course, plenty of people will be. Nevertheless, the people who are doing these sorts of operations will be waiting to see if people are obviously buying it at these dips, and so far they have been, you know, which is obviously the counter argument to bear flags. So, you know, if we can break past this phase here, which is obviously then, you know, this zone, and let's not be, by the way, for new people out there, there's not really about lines, even though quite often when we look at things it goes right to them, it's not really about that. It's more about zones. Okay, so until such times as we're past this zone, whatever, but what we're looking at in terms of movements up the way, just to kind of come up, if that was resistance there, it'd be 20% up the way, 20% up. I mean, this has been decent today. What have we got today on this one? 5%. You would have been better off in GME, you know, again today already. So that sucks. It sucks that somebody, it sucks that happened like that, in that sense, you know, but also it's great that you made some money, so I'm dead happy for you. Would I hold on a bit longer? Well, maybe, sure, right? Because this has the potential to go up at the minute. GME has the potential to go down at the minute in that sense, but GME could push even higher. But you're not going to sell any of the GME shares that you get. therefore you're better off buying GME when it's on an actual dip as opposed to buying it on the rise, you know, in that sense, if there's going to be one, which we'll know if there isn't going to be one whenever we're having our brains melted, you know, in a way. So like, it's kind of like that, but at the same time, you're better off ultimately, as history has shown, waiting to buy it on the dip for two reasons. One, you're buying it on the dip and getting a better price, and two, you're adding your ammo to where it hurts the most for people, you know, because at any given point there's always going to be, if people are shorting and longing things, then they know and they're looking for it to go down there, and there's actually fuck all volume stopping it from happening in between, and you thinking that you're having any material impact in between two zones is foolish thinking, and don't, you know, like it, some people out there have said things like that at big YouTubers recently, and intimated that that's the case. And well, frankly, it isn't. You're not really doing anything to help the cause when that's happening. But whereas if you buy a concerted effort where there's a cohort of people, then that does change things. So you're better off choosing identifying support and resistance to do things that. So obviously you thinking that at the minute ties in exactly with what I'm saying. You know, you've seen the price coming up here and you're thinking to yourself, well, you'll maybe sell it there at that point, which means that other people would need to be, you know, so and that could happen. That can absolutely happen. In these instances, it's likely it's more liable that there would be a reduction in selling pressure that would actually bring that up the way. We'll have to look for the increase in volume, of course, as well. But yeah, there's diminishing volume throughout all of this. I mean, just even a little bit of volume and coming back up to like to even to there or there would probably be enough to kind of see a fairly decent reversal in price, because like I say, people are looking at it and they don't want to buy it in that area, which is what a breakout really is, you know. So it's like, you know, do you sell it in the middle there, or do you wait till it gets to an area where there'll be a concerted cohort of people working against you? Well, you clearly wait till the thing, and that's where you wait till you buy as well. That's the underpinnings of trading. Anybody who says anything different is new, which is cool, but they're new. Trades putting or on purpose, of course, we had 1,000 views. Well, yes, that'll be it's 1,000 view gate over there in TradeSpot and land, but he's not fibbing. That came from his thingy, so he's not fibbing. But yeah, it'll be viewer gate. Just need to get a clear 1,000 buster, and then he'll tell stories. It's funny though as well, he says all that and then he tells you like another story. He's like, I can't tell that story, but then he'll tell a different story, right? So you get the story anyway. I thought you were heading up the road as it happened. It doesn't matter. So let's see, I'll say this though, I personally do not feel comfortable waiting for the dip. My last purchase was at 181.22 or 181 2 days ago. I made it on the train by 1 day. Good stuff, Stefan, man. Like that's like, you know, it's all about doing whatever you're comfortable with anyway. Because when I talk about this, it's like I wouldn't beat myself up over FOMO. You know, I wouldn't. So I can talk about it that way, and it comes across as being blasé, almost as if it's to say, you know, where it doesn't give the answer that people, it doesn't scratch that itch of but what if I miss out, you know? And there's me being like, I don't know, and then people are like, but you're saying it's going to go up, and you're not worried about missing out. And it's like that concept of not chasing the trades, man. I can and I'll chase them at the right period of time, but I'm not going to do that right now. Because like yourself, I got in before, and then you know what it's like. It's just I get what you're saying. You want to, especially when you're looking at what you've made on the way up to where it is now. It kind of adds to that kind of eagerness to see that increase faster by having a bigger number. So it's painful. I know you saw it in there from Apple Blossom. I mean, I saw on my end it was at 1,000 because I saw it. TradeSpot and Rocky saw it because he made a comment when it happened. Says Apple Blossom. It's her birthday anyway. She's there's no why would don't say somebody's wrong on their birthday. You can't. You just have to accept it, Jimmy. Sorry, man. But she's right though. I did see it happen. I saw it. It was at 1K. I saw it there. I think I saw 1004. I'm not sure because that's a bit weird because I wouldn't just say 1 point something or whatever. It might have said 1 point something. I'm not really sure what I saw exactly, but I now looking back because my brain is malleable and wants to start putting in new memories into it. But did I see that happen? I think maybe I did, you know, and that's cool. So I wonder if you'll, but we just need it to be for for like a couple of minutes. It is a good story, so it's good enough, you know, but it's so funny to build up hype over a story. The Dead Money All-Stars, by the way, Dead Money All-Stars, thanks so much. What did you think of that episode, Dead Money All-Stars? And that, was that useful? Did you think that I was on point with that? I didn't see what you said earlier on, but obviously you and I spoke yesterday about stuff, so I wonder what you thought of that, if whatever. Happy birthday, says CD. Yeah, there you go. Excellent. Wee. You're all quite convincing. If I didn't have concrete proof you were wrong, I might believe you, says TradeSpot. That's funny. Lies, says Queen Bee. 1,000 viewers. What am I on at the minute as it happens? 222. Bada bing, bada bong. That's all I need. The twos. All the twos. That's it. Purple Dino. Happy 30th birthday? Question mark. Never ask a lady her age or something along those lines. Apple Blossom says 25. There you go. 25. Ask her twice. It'll be 24 next time. So stop asking. All the twos. Yeah, that's right. Tiddles equals jacked. Oh, tiddies equals jacked. Oh, good, Zaris. I'm going to go with Zaris on how you pronounce your name. Zaris Admiral. Aaron, there is a screen cap in Discord in the tea room, 8:52 a.m. CST. There's a screen cap in the Discord in the tea room. There's a screen cap at 8:52. Something like that. Wonder where that was. That'll have been quite a while ago, right? Or wait, no, after this going down. Where is it? Where's 8? No, CST. That's going to be like 4 hours before then, right? Gosh. That was funny, all that chat. Here's Jamie's proof for anybody who wants to see it. 993 peak concurrent viewers. That's what YouTube's telling him. So that's why he's saying that. But there's a screenshot somewhere else. Is it this one? Is it that can't be that one. That's not Jimmy's chart. That's somebody else. That's Susan was asking about turn off all these price tag things. It'll have been that it's that indicator over the left. So by the way, as we talked about earlier on, you've got these buttons on the left to get rid of your stuff. If you hit that wee drop down jobby, you get to see like eyeball and settings, and then over there X is remove as well. So you can hide it or you could remove it, but it's something you've added perhaps by accident. I was going to answer it at the time, but then I think you got it sorted anyway. Where's the screenshot? Is it going to even be possible to find? What's that there? Anyhow, let's have a quick look over here. Meme fun. Anyone got any memes for me? What's this? What's this one? I've seen them all, I think, already. That's too hard to read on screen. Oh, this, of course, as well. Buy the dip. That's what Stefan doesn't want to do. He doesn't want to buy the dip. Doesn't want to turn it into this thing. I made a poem. What's the poem? Casey Hansen, 202. 202 made me poo. 246 made us straight. 280 to 294 near-term profit target. Nice poem. Like Boomertown bots back at it again. I can't read that. What's this thing say? Florentine. Is it? Touch layer. Press dollar. Is dollar. Doom. Boom. Yeah, that's it. Reserve currency. It's so funny that it's so funny that we own the world's reserve currency. People like to put Bitcoin in here, but they don't know that. They don't know. When people say blockchains come into stonks, what they mean is GameStop's going to be their world reserve currency. That's just the second half of the sentence. They just haven't got around to saying it yet. They just don't know that that's what they're on their way to say. What's that? Rocky Outcrop. Yo, when you brought your share 181, can you show your indicators if you have a moment? When you brought your share, can you show your indicators if you have a moment? Not sure I follow that question, but you might be asking me for like example of like what it's like to take a trade or something like that, something along those lines. Have I got that thing still open? I shouldn't really have that open still, should I? Probably not wise. Something like that. It's probably some thing about not having that open that's wiser or something. I mean, I can't cast my mind back to exactly what it was that I was thinking at the times that I was doing any of that recent stuff necessarily in terms of it. Terms of that, I can't honestly tell you. 181's even a bit high. What did I didn't get it at 181. Got it lower. There's no point in explaining any of that stuff down there because that was all done by TraceBot and etc. at the time. I don't know, man. I think it was just along the lines of having money and that it was after this drop down and the prices were going up. I can't really remember off the top of my head, man. I don't think there was much in it though for me in terms of real making. I don't know, man. I'd probably just been talking about it all day and decided that I wanted to. I can't. I will have had a really good reason at the time, man. I can't remember now. I can't remember exactly when I did it or whatever. I don't open up my account. It was a couple of days ago. It's 3 hours. It's 3 hours before that. 3 hours before. 3 hours before that. Gosh, damn! Like that's a lot of scrolling. I just joined Discord and posted that, and I already have a stream. Love you guys! Yay! TraceOne, what is the difference that you two actually have real knowledge? Wait. The difference is that you two actually have real knowledge and value to share with the world, not just short-term hype. Well, I talk about making skill for life. You know, I want people to have a skill for life here. So it's amazing. It's an amazing thing. It's very empowering. I think it's a very good positive thing to have. I gotta go. I'll finish with watching later, says Apple Blossom. I hope you guys have the best day. Okay, Apple, thanks very much. I hope you have the best cake ever. So, you know, happy days. Good one. Have a good one, matey. Matey, is that too masculine? I don't know. Have a good one, lovely. The Dead Money All-Stars Magic Trade Box from 975 on AMC, probably a good example. Magic Trade Box. I don't know, man. Magic Trade Box. Was that... I don't know. Is that some like YouTuber or something like that you're talking about there? I wonder what that is. That was me. Unless you're talking about me getting that trade at 970 or something. I was talking about that one on AMC at the time. So I don't know. I don't know. Right. Hi, Rocky. Where are you from? Jamie referred me to come here, by the way. Oh, thanks so much. That's good to have you here, buddy. Really great to see you. B-Tan 9. I'm from Scotland. And we both have Irish heritage as well. So got a mixture of the old genes in there. Got a little mixture of the old genes. You're welcome, Sayer. That's good. Andy, give a man a fish, feed him for a day. Teach a man a fish and feed him and his family for life. Indeed, Andy, we talk about that a lot on the channel. Except what we talk about here is taking it one step further. Because we don't agree with George Bush on this channel. We do not agree with George Bush. We think George Bush was an idiot when he said this.
I know the human being and fish can coexist peacefully.
We think George Bush was just wrong. It's just what an idiot. Man and fish cannot exist peacefully. Not when I'm around on a mission to teach you how to wage war on fish. I don't want you just going out there and catching one fish and feeding your family. No, you're going to go out there and actually take it to the fishes, you know, for the first time. Have the fish going back home and telling each other how they're actually scared, you know, that we've got them on the back foot for the first time. That's what I want, you know. Is Scotland Yard actually in Scotland? No, unfortunately, it's in England. It's down there in London. My last name is Miller. I believe that is Irish. Might as well be, or Scottish, or one of them. There's plenty of famous people from all over that have got both. I couldn't tell you the history of it. Might come from having had somebody in your past who was a miller of some sort and milled shit. Probably that's the way it's went, right? Bush is always high. He is. He's always mega high. You can see it in his eyes. He's like, wow. Man, I know you think he's like George Bush to his father. George, you're doing great as president. Are you enjoying it? Yeah, man. It's great. I was actually supposed to be saying, have you ever been president? And then George Bush goes, yes. And he goes, yeah, but have you ever been president on weed? But I completely messed the joke up, so whatever. Rocky's waging psychological warfare on the fish. That's right. That's right. So that's it. Waterboarding the fish, man. Got a link to Discord? I do. I've got one. Let me just get that for you. ! Discord. Boom. Oh, that got some laughs in the end anyway. Cool. Teach a man to fish. Or it was just a trade spawn. Wonder if you got the last. Probably trade spawn, right? Teach a man to fish, and the next day he will set up a Telegram group selling price targets and signals off the back of your YouTube videos. And then someone will send you a link with your half your face on it. Yeah. That's how it'll go, probably, actually. Yeah. So anyway. Right. Great. Okay. That was a 2-hour long stream so far. What are we going to do? I think I'll have to kind of reel it in for the last couple of minutes then, talking about fish and kind of get to wrapping things up a little bit. I'm surprised a little bit, but then as well, not that surprised that none of my crypto homies have been coming in here asking me for TA on cryptocurrencies. What with my channel having done so much cryptocurrency TA over the years, everybody. What I want to do then, I suppose, real quick, is just kind of have a look and say to people that we've made it so far, ladies and gents. That's really great. But of course, like we're talking about, we did actually already talk about this kind of a little bit with Bitcoin. We want to see if we can actually push past some key areas. Until we've done it, we haven't, right? Until we've done it, we haven't. And it's just not, there's not an awful lot more to the analysis right now than saying that this is what we need to, like, right now, right here, right now sort of thing. This is where we want to see things going up to 43k and beyond. That coming up here and flirting with 40k, etc., isn't floating my boat quite yet. Continuation, good. Ethereum, wait, but that's telling people what they want to see. It's one thing. The lack of bullish divergence between the previous lows in this tentative downward trend is disconcerting. The inability in the RSI to push past this point where we would have the swing failure, a sort of idea. Of course, it's not a swing failure from a divergence point of view, but simply taking out that previous level is somewhat disconcerting, and the RSI button up against it somewhat disconcerting. The positive side of things coming in from the stochastics, that's obviously very, very good to see, is what we want to see. To actually then push on from up here and get some continuation. It does look likely, but that's the way things look before they crack down. It's easy to wait for confirmation on this one. Again, the lack of divergence down a 24-hour time frame is not ideal. You're seeing a completely different story in the 4-hour time frame. However, you know, what is these fucking things? Where are these coming from? Is that LLS? That's a candlestick pattern thing. I've just shown that. Anyway, yeah, the bullish divergence you're seeing on the 4-hour time frame, the head and shoulders pattern, etc., brilliant, all the perfect setup, etc., with everything being in your favor, unlike the stochastics, which is actually pointing down the way at the minute. So, you know, it's kind of like a flip-flop story there. We need to see this pushing past the neckline of that head and shoulders, etc., and it's the same overall kind of argument. Ethereum USDT, same sort of situation again here. Nice head and shoulders potential, nice 618 pocket turnaround area for us. Nice. Was that right? In fact, I'm not actually 100% sure why I drew that box in anymore. Whatevs. Moving up past the Donchian channels, you know, pushing them, closing up above them, all that good stuff you want to see, but the story remains exactly the same until you're above 3k. Well, you aren't, and that's a big price point, big profit taking target. If we push past 3k, 333333333 is the next target as an intermediate one, but then beyond that, actually, I'm looking up towards 3,600. Failure to do so, I want to see support coming in at 2,500 up to 2,600. Failure to do that, then I think that is then the writing's on the wall for at least a retest back down towards the low 2Ks. So there's your kind of your tolerance points for you. Link USDT, again, it's a good story. 618 golden pocket right at our heads here. $33 is going to be absolutely fantastic in terms of a return to the potential positive momentum. You know, looking back at the 24-hour time frame, you can see how clear that was as a big area. Got a big divergent double top sort of turnaround area there previously before the prices sank back down and then on up to put in their all-time highs. Again, those were of course all-time highs at the time. This turnaround here at this point here, then therefore having had a recovery so far is of no surprise. Really, I'm happy enough, funnily enough, to see this thing drop all the way back down to the 236, because of course it's one of these typical retraces where we can see the 618 lines up perfectly with the 236 for us, and that is, you know, looking good overall. Everything's looking good, you know, looking good in terms of potential, because the potential is, you know, how does it look? Does it have potential? Yes, it has potential. How does it look? It looks like it's expressed a lot of its previous potential right up to this point. How does it look? Is at a turn? Is at a pivot point where, you know, if you want to diminish your risk, you could wait until you got confirmation. But, you know, it really depends. You got to kind of know your audience, right? So in terms of that, then as well, I do know my Tezos audience, and I know that you're feeling it at the minute with the fact that the prices are unable to recover $4 currently as we're looking at things. But can we get there? Well, yes, we can. Looking at the prices with what they've done over the last couple of days, staying up above the 236, actually, you know, not running away towards the top side, but putting in a healthy enough turnaround so far for us. You know, if we do see this come towards our favor here, then we can be looking up to higher price targets, and it comes in at 550. That's kind of like where Chainlink is in many respects at the minute, having been up at 33. So Tezos, not out there on the vanguard pushing the prices up the way, but certainly one which remains as a decent enough opportunity for us if we do see it kind of running towards the top side. It's experienced a lot of pain. Quick selection from around the world. Oh, check it out. Aaron Baldwin just became a patron. Thank you so much, mate. That's wonderful. It's wonderful. That's really wonderful. In fact, I can change you, can stick you onto this. I've not actually got my screen set up properly here. Need to do a couple of little ones. You know, change my wee leaderboard over, put number 10 in, etc. A couple of spaces left on this one. I've got 14, I think, really overall now, patrons. Really thank you to all of you guys. Xavier, unfortunately, can no longer continue as one. So there's other ones, and things like, I just put, you know, a couple of names on there. Sort that out some other time. Make sure that I get guys that are missing, and ladies, off of that on that list. A couple of looks at some other coins. You can see like Tezos Band, you know, got a big kick in the teeth. It's recovered very, very well as well, and but we're a ways away from the moving averages and the middle of the line, and we're looking up here towards Band and saying that we need to see prices taking out the 10 buck 11, really it's 11, 12, $13 that you need to take. Anything up to the 11, 12, 13, depending on like closures in terms of time frames, you know, 4 hours and above 12 starts to look more positive. 113 sort of daily above 10, 11 above daily starts to look a bit more positive. We're doing all right at the minute. Bitcoin Cash, you know, as well, same sort of same setup everywhere. This one without the divergence that we saw in other ones as well. Like bring up .USDT, these two lows here. That's the 24-hour time frame. Oh yeah. Where are we with regards to this? What the hell is that doing there? What the hell are you doing there? That's our low. That's our high. 236 there. 618 where our previous low was. You know, as with all the crypto markets, we're at an area where we've got a pivot. Wanted to be taking out our previous highs. Looking if we do see a retrace back down to the 618. Asking the questions about the 618, is that at our previous low? If we do take that out, then how are we doing with regards to divergences? Because we don't have like a massive load of it here in the 24-hour time frame. That there is that story based on the fact that we want to be going up past this point. If we actually see any sort of problem anywhere in here, then we're looking and asking questions about that. In terms of the 4-hour time frame, it's the same thing, except you've got a lot more positivity. Dot here not really having the best in terms of these two lows, but then pushing up the way in terms of RSI is a bit better story. So that was that, and then the turnaround, and we're still asking the same sort of questions. And you know, that's the crypto markets everywhere. If you're looking for something that's slightly different, then sort of what's different at the minute? Yeah. USD versus JP, well, Forex is different to crypto. Yeah, that's different. Okay, accept. Let's have another quick look at another quick list of cryptocurrency pairings, see if there's anything that's really particularly different. Everybody likes to know about Doge. How's it doing? 34. It's not doing amazing or anything. It's doing what it's doing. It's a bit flatter than the other ones that looked at. Less head and shoulders-y. Same concept. Need to take it out, but it's going to actually start to do it in a trending fashion. that sort of idea. But this is the key area to be looking to, and do we get past it or not? That's coming in at around about 40 cents. It's actually incredible that it's at 36, really, given how much of a piece of shit this thing overall it actually is, in terms of the cryptocurrency world. But it's, in many respects, it's no less of a piece of shit than Bitcoin. It's really just about how much faith there is in any given project. Overall, we're really got a setup to say that if we don't make it past this point, then what we're looking at, in terms of this thing, would be a sort of sorry, would be, of course, bad news, right? A head and shoulders pattern, that's what that would be if that didn't work out for us, and a massive broader term head and shoulders, not as visible on other cryptocurrencies. Where's my, that's my left shoulder, that's my head, that's my right shoulder. No, not so much. So Doge has got some convincing to do on the bigger time frames, that a lot of other cryptocurrencies haven't got quite that sort of set up at the minute, haven't expressed it actually in terms of some of them, if you were looking at it like that. But so that's a bit much to be saying that. I'm liking the look of Uni overall in terms of its volatility in this section. It's had a better recovery in many respects. Right, whatevs, who cares, right? That's enough of that. It's enough of that, isn't it? It's enough of that. It's enough of that. What do I want to see from this? Well, I mean, to be perfectly honest with you, it would be really lovely to see that. That's what I'd be really lovely to see it. I've expressed already that if it goes down to this zone, then I'm a happy guy in this area. Because then, of course, it's coming right into where we'd be happy to see it. But of course, I'm also a happy guy up in this area. And generally speaking, I'll be waiting to see if there's an opportunity to carry it on up the way for the next sort of buying opportunity. Really, it's hard for me to, because I don't want to sell. You see, I'm very nimble when it comes to other markets, and I'd be happy to buy into momentum and carry that up the way. But then I'd be saying, where do I take profit at? And for me personally, I've got this sort of bias, in a way that I don't want to be selling my shares. So if I'm not selling my shares, then what am I doing? Well, I'm waiting for the better buy entries, and that's what I'm wanting to do instead of instead of hee-haw, really. Rocky Outcrop, which crypto do you like the most for travel and actual use worldwide? Great question, by the way. Great question, by the way. There's actually, in terms of utility, etc., there's quite a few of these things out there. You've got the likes of Swipe SXP. Now, this is not the actual crypto itself, but in terms of the the whole idea about a card payment infrastructure for cryptocurrencies, where you're talking about having a debit card, etc. here, which presumably this screen's going to flip to a debit card, because that'd be cool if it did. Go on, turn it into a debit card picture. Do that. Whatever, it's too slow. That sort of thing. And you can get them from various other places. Other providers are available. Crypto.com. I think I've got referrals for both of these things, by the way. Whatever, check my Discord for that. Whatever. This also does cards for your debit cards, so you can spend your crypto more or less using the back end infrastructure here of these sort of services to kind of take what you've got and just turn it into cash for you there and then. In terms of actually using cryptos cross borders, etc., to pay for things in places, well, it kind of comes down to what infrastructure anybody happens to have at any given time. And the favorite cryptos I used to have are now kind of no longer them in that sense, because of their costs and fee structure, etc. at the minute. So there's lots of problems to do with scaling on some of them, which haven't really fully been fixed. Oh, I forgot that I disappeared myself. Let's go back to a screen with me on it, shall we? Or shall we not? What's happened here? That's not what I wanted. Just a second. That's not what I wanted. This one? Ah, right, great, nice. So, so there's so infrastructure wise, it depends on what the endpoint users got. So sadly, when I answered you, my first answer kind of in a way is methods that allow you to kind of get into the fiat currency and pay somebody where they're more likely to accept your form of payment using crypto at the back end. Do Coinbase have one of these cards as well these days? I'm not too sure, but those are the sort of the options that I think about. And then in terms of the actual cryptocurrencies themselves, the ones that I used to like on that front have kind of changed in terms, because it used to just be Bitcoin, etc. And nowadays, ones I'm looking forward to in the future in terms of their potential growth for that sort of a thing are, I suppose, the likes of Tezos and OneCoin, etc. But we're not really going to say that there actually is an answer to that. And then, of course, as well, there's other elements of the crypto world that I'm hoping to kind of contribute to. Jamie and I both are together as well, such as Picnic, which we're setting up to try and, on the one hand, on top of providing the classic infrastructure needs that you would have for the current cryptocurrency in terms of payments, etc., but also to try and put the fees to a decent use case, for the fees themselves and accrue value for people, and then also build an infrastructure. You might recognize things like that sort of options page, for decentralized options, where you actually are, there wouldn't be a situation where Citadel, etc., would be able to do what they're doing, because the liquidity of the shares would be that everybody providing these things, in essence, if you like, owns the float in a sense, because it's decentralized and it wouldn't be in existence without them. So there isn't any sort of activity on here which would be falsified, etc. That sort of thing, which is nice to have as part of it, and various other doodads along the way, of course, as well. So lots of good shit. Lots of that good stuff, and hopefully be a contribute to the infrastructure of the DeFi, decentralized finance world. Decentralized finance being more than just simply, exchanges, etc., but the whole aspect of things to do with that. And then ultimately as well, with regards to the basket token, because Picnic and Basket, which I was converting in my head to Biscuit for a second there, Picnic and Basket will work hand in hand, whereby the basket token creates a fund which then has diversification of its stored assets to then accrue wealth over time, which has a sort of a fee applied on it for people who withdraw from the basket fund themselves. So this would work as a token that represents these stored assets as a fund, and if you wanted to cash out from it, then you would then of course increase the remaining participants' wealth as a result by a small fraction of a fraction. But these things add up over time, and it's about the preservation of wealth and capital, and as well sort of about the democratization of finance is kind of the idea behind. Anyway, right? It's all good, and we've got a jazzy header there where you can move your mouse around in the background changes afterwards, and I suppose at the end of the day that's probably the most important part. It's going to be good, right? So those sorts of things. Anywho, I did want to wrap up the stream though, so I will start to just check and see if there's any other sort of questions in here that I'm missing. I'm going to ask a stupid question. Do you honestly think the real world utility of crypto matters, or is it simply the most popular decentralized currency will be the winner overall? That's a great question, Jeff. There's nothing stupid about that at all. I love it when people ask me stupid questions, but they're not stupid at all. It's really funny. You're obviously humble. Thanks for asking that question. It's a good question. Do I honestly think that the real world utility of crypto matters? And will the most popular decentralized currency be the winner overall? I think there's two separate questions there, really. At least I'd attempt to answer them separately. First off, I do think the real world utility of crypto matters. Now, I think there's some use cases which are overblown or over sort of... I was talking about this yesterday in a way that we were talking about how you could apply NFTs to serial numbers on games, etc. So that, and I was saying, well, that's cool in a way, but there doesn't really need to be a blockchain for that necessarily if it's just about sort of authenticity. Or if you do that, then there doesn't need to be serial numbers. One negates the need for the other. But then there is this other sort of record aspect of it where it's real and it matters, such as that, you could own Ryan Cohen's version of some computer game, for example, and that would be authentic and legitimate and provable in the same way. If you think about things like how you might want to own Jimi Hendrix guitar and it be like provable in a way, at least that the token would prove it, but it does in a way steal away a little bit of the value of the item itself, because again, if you think about Jimi Hendrix guitar, if you then put an NFT thing to say that that was that official guitar, you could sell that NFT, keep the guitar, sell the guitar to somebody else who knows that that actually is the official guitar, and somebody else is running around with an NFT and a fake guitar, and suddenly there's two real Jimi Hendrix guitars, like the real one and then the one which is the real one, you know. So like that sort of thing becomes a possibility. I don't think it really matters with like digital products and stuff like computer games, etc. So it depends. And then there's other use cases for blockchain stuff, which is like, do you really need it or not? So like there's some examples which is like debatable. It depends. If blockchain can be decentralized to the extent that it brings all this extra additional computing power in, that makes it so that it runs faster, so it can accomplish, you know, larger scale tasks better on a distributed network, and therefore safer and more reliable with bigger redundancies built in, then it is good for things like automated driving vehicles, whereby, you know, they're going to be able to like base their decisions based on the stuff that's recorded, all black boxed, if you like, so that you can see if things go wrong, and relies on a massively distributed network of computers, which is unlikely to suffer from any attack. And these are the concerns you would have, you know, in terms of like, what if BMW had, or Tesla or whatever, had self-driving cars, and there was a computer sat somewhere, and Elon Musk spilt his Gatorade all over the computer one day and everyone crashed, right? I mean, it's like these sorts of questions, obviously in a more serious sense than that. And then that pits up against the idea of, well, we could do this with computers and make it secure, because we can do things securely without needing to use this blockchain. And if we actually cut the blockchain element out of it, it would be faster and therefore safer and better and more reliable, and we just have to have redundancy set up. And I get the two sides of that coin. So I would say that it does matter, and I do think that there's a good evolution ahead of us, and it's incredibly interesting. In terms of like real world utility as well, like, you know, financial implementation of things, like we know, well, another common topic is like T+0 settlements for, you know, in stocks, trading, investments. So that's good, and a good use case, right? And also the whole backup legitimacy of it, being able to track things properly, really good. Other use cases are, well, there's millions of them, millions of good use cases. So I do believe in them. Secondly, do I think that there will be an overall winner? I think that's westernized thinking. We live in a culture. If you've ever read Clash of Civilizations, for example, you'll know about this type of idea. But we or other types of books, you know, just thinking about things like De Bono's course on thinking, for example, you'll learn a lot about how we, growing up in the Western world, have got a binary concept where we often think about like A versus B, you know, which one's going to win. And as we've seen throughout history, in terms of the indelible impact that the Western cultures had on other cultures in the world, our interpretations of things are often wrong, frankly. So Japanese culture, for example, doesn't so fixated on the sort of the right and wrong, or, you know, etc. And there are alternatives that people naturally would think about more than just thinking in the Western world. In fact, the word alternative itself is a good one, because it's grammatically incorrect to say what's the other alternative. So anyway, I digress. I don't think about it like that. I think there'll probably be numerous solutions to different cases across the world, and that there will be, like, you know, a quote unquote winner if you want to, but it'll be an elected winner where people will have said this one is the winner because I say it is, as opposed to necessarily being the winner. I do think that there will be some use cases along the way, and technologies, etc., which ultimately go by the wayside because they came too early and people weren't ready for them, or vice versa, whatever. Little things that happen like that, and then I also think that there'll be a list of good top performing currencies. When you think about the use cases as well for things like Bitcoin, it just becomes more and more and more along the lines of like reserve currency type aspect of things, in that evolution of that thinking, and other ones fill gaps as well. I don't really put much stock in other use cases out there, like XRP's idea of it being a remittance thing, but I do have so in terms of the technology, so what they sell the technology to people, and they kind of say, oh, this is great for cross-border payments, etc., or for providing liquidity to people on exchanges for forex transactions, etc. I actually don't really truly believe in that, and I don't think you have to. I think that that's kind of what he just talks about to people, and that the people who are really investing in Brad Garlinghouse, who does XRP, for example, and Stellar and other people who talk about those ones, what they're actually talking about is the actual the organization and the development and the implementation, the execution. We all know that good ideas are a dime a dozen, and it's the execution of any good idea that's important, and that actually we probably are willing to extend that out of the way and say that a bad idea well executed is often better than a good idea which doesn't get off the ground, and that extends as far as like this idea where I don't really properly care much or believe much in the sort of idea of the XRP liquidity idea of things necessarily that much, although I do believe that infrastructure and everything is required, and that I just don't think that there's anything inherently special about that. But it's their execution, it's there's the relationships they're building up and all that really matter, and that's what you kind of invest in whenever you're investing in some of these things too. So we talk about the technologies and stuff like that, but a lot of these things are people driven, and it's about who's behind them and what they're doing. The same thing actually ultimately, and again, other people's place to be saying this, but the same thing could be said about like any endeavors that I would make into the cryptocurrency field itself. Like how good necessarily is any idea that I'm likely to come up with, or whatever. Now I would say that this sort of thing here is a very good idea, and I don't really aspire for perfect when I talk about things. I say that perfect is normally, well, materially unachievable, so you should aim for very good, and that's the perfect expectation or aim. So that's why I've gone for, or we've gone for with this, in a sense. But I'm open to the debate about even how much does it even matter about the use case for these things whenever it comes down to the people behind them and etc., stuff like that. So sorry for giving maybe perhaps too much of a detailed answer to what you maybe thought was a stupid question, but those would be my more or less complete thoughts on the subject. I believe in decentralization, says Jeff, in response to, I guess, our chit chat here. Whether my dollar can dance and play songs and look all cute and pretty doesn't really matter to me. Maybe more so to those either new or subject experts. Yeah, I mean, there's going to be a million different ideas, and funnily enough, for a lot of people it does matter. These things, just little things like being able to have ownership over a picture, etc., matters a lot, and that's a real use case for cryptocurrencies, which doesn't really come down to value objectively necessarily, when you're talking about having real ownership over something which is otherwise subjectively ambiguous in its ownership. Right, so there, agreed, essentially. Right, cool, excellent. Well, by looking back at this, I can see that I don't really seem to have missed anything. If there was one thing that I could have missed, I suppose it'd be VET. The likelihood is, buddy, just looking at VET when you're asking that question about when you kind of look at VET, the likelihood is that it's just the same as the other ones that we talked about to a greater or lesser degree. As you can see, it is. In fact, you can see here that there's a bit more going on. We haven't got as far as closing above this today. I would really love to see the price of VET hit closer to 14 for its close, so we could actually push past that previous close. This a bit closer. Obviously, we are just in the turnaround phase on this one. We obviously need to see follow through. It's come so close as it is at the minute. That's pretty good. Backing away from here would suck because it'd be a lower high. So if we are going to have a pullback, I'd rather see that we got a close slightly higher. Then I'd be happier to have a pullback because we'd have done enough work. Otherwise, I'm going to need to see follow through over the next couple of days so I don't get like depressed about the lack of achievement here in this one, because it is going to be a sort of an element of psychological failure as well if we don't achieve anything properly here. But overall, looking pretty good. In terms of the discussion, we're above this zone right now. This is a profit taking point for a lot of people. I wouldn't be surprised to see a pullback. That's why I'm questioning about where we end the day, which is what, in an hour and 3 minutes. And I'm looking down to the to if we did push down the way, going to have all eyes right here on the price if we drop down. So I want 10 cents to be sustained. It's 30% movement. There's a lot of trading to be done between those 2 points. Be careful in terms of like hodling through those sorts of movements. Right. I'm going to have to catch up with any sort of chat that I've missed throughout this here as well. And that it's a little bit different today. I'll try and advance on this and kind of keep it going over the next wee while. So yeah, that's a bit different, wasn't it? Bit of a different episode. Thanks so much for tuning in. Really do appreciate it. I'll catch you all next time. I'm going to do it tomorrow. I'm going to do a quick reverse roll call. Jimmy can say hi.
Hedgies are fuck.
Right. And I'll do a reverse roll call here. Thanks so much, Purple, for tuning in. I'm going to read through all this as well, and I'll not miss any chat, hopefully, and all that. Right, good to see you, Space Captain. Thanks so much for tuning in. Alba Gubra, Jax Pied, thanks so much. Jeff, thanks. Scott, thanks. Christy, thanks. AV80, thanks. Dead Money All Star, Nova Scotian Unicorn, Ted Boy with a H, excellent. Hail, hail, good to see you, mate. V Bardos, Scott, Mad Gordon, Kaz Susie. Cheers, Rocky. Got tons of value today.
Value out of today.
Thanks so much. Really support that. Really appreciate that. Really appreciate that. Yeah, all the donations, all the members. In fact, I tell you what, can I get that credits thing up here? If I can stick that credits thing, you can add, like, is it here? Credits, yeah. Add source, credits, add source, and then like, how do I run the credits here? I want to run the credits. So over here, you hit this button, and then credits, roll credits. Right? Is it going to work? Awesome, awesome, awesome. Then I get to make this big. Yeah. Whoop, whoop, whoop. Awesome, awesome, awesome. That's so good. Right, then I hide. And I don't know how much that's going in through the mic, but I can just stick that there as I do it. So to everybody here, you are amazing people. I don't know how much data this includes, but this is brilliant. Thank you to all the new members. For example, Eddie, Patrick, Nano, Tony, Mining Boom, Orangutangled, Max, Worth His Life, and Azazel. Wow, right? Wow. Fucking brilliant. Totally. Jimmy's saying wow over here. He's liking the credit roll thing. I was super jealous when I saw him have the science symbols pop out his head in his stream, so making him jealous back was great as well. Thanks for watching. Super chats: Daniel Assange, Worth His Life, Susie Chi, Orphan Pipe, Kaz Suzuki. You're fantastic. So there's people who subscribed. Well, I missed a couple of names there. Jacob, Andrew, Dennis, Kim, Lucas, Undertow, Jones, Christian, Canadian, Moose XZ, The Dawad, Orangutangled, Udiggity, Gavin, Vlad, Buns, David, 2S, Cash, Jamie, Kurana. How about that for a name, Jamie? Richard, Harry, Eddie, Patrick, Nano, Tony, Mining, Max, Greenwell, Worth His Life, and Azariel. All of them, all of you in the chat, massive appreciation. I'm here for you. You're here, and some of you are here for me, and it makes me feel super great. So thanks so much. We're here for each other. That's what it is at the end of the day. Apes supporting apes. Oh yeah, time for a